What's up, everybody? Welcome to Froggy Stonks. Entertainment purposes only, not financial advice, not a financial advisor. We're going to get the space call going here pretty soon. We're going to have an overall discussion on mortgage-backed securities, boycotting long positions that Citadel holds long, and the overall idea of not using ISDA Banks to put your money in because your money's being used against you in very, very specific ways. So I'm going to tweet out the call. We're going to wait for folks to jump in. I know it's pretty early in the morning, so. What's up, everybody? Just waiting for the room to load up. Feel free to come up and speak. It's going to be an ongoing discussion for the next couple hours about the topics above, which is ISDA Banks, mortgage-backed security products, boycotting Citadel long positions, and basically not giving liquidity to the market makers anymore. It's very, very important topics, which is affecting everybody currently, whether you own AMC or you're in a retirement fund. Got to invite someone real quick who's really knowledgeable about these mortgage-backed securities. J. Brett. There you are. So, in a nutshell, just to start the call, mortgage-backed securities. Basically what caused the '08 crash. Really, really bad way to rack up a ton of debt when people don't want to pay their bills. It's popping back up again. There was a lot of people who are not keeping their word on the forbearance for mortgages and rent. It's all hitting the market. There was a mass movement to sell homes this past couple months because prices went through the roof, almost 30% overvalued on homes. And now we're starting to see it draw back, which is a bad thing and a good thing. I see Froggy and Miss Diva up in the room too. If you guys want to speak, feel free to come up. But we're watching the housing market start to take a little bit of a tumble finally. We're watching mortgage houses draw back on giving out loans and cutting staff. How's it going, Diva? How are you this morning?
I'm just saying, I'm speaking for Froggy. When he can't come up, he support me, but he can't come up because he's working.
Yeah, that's fine.
He's ignoring you. He's just working. So I just had to tell you that.
I figured it's pretty early in the morning, so.
But God bless you guys. I'll step down and listen.
Yeah, you can stay up if you want. So yeah, we're seeing the housing market start to take a turn in certain areas. I know there's still high demand in other areas, but what we're witnessing is the mass exodus of people from inner cities that realized during the pandemic the situations economically for life, economically and living situations in inner cities has gone to shit. So now they're all looking for homes. They're spreading out into rural areas. Cities are losing people. They're talking about California and New York actually losing seats in Congress because of the amount of people that have left the state. So that's a really, really big situation. Here in Albuquerque, there's a lot of people from California moving to Albuquerque because we did have cheaper cost of living, but it has rose exponentially in the past 2 years. So that's going to be or have a big effect on the market going forward is when banks start having these loans again, just like 2008. People are going to start failing to pay their mortgages again because they can't afford everyday living standards anymore with $5 a gallon gas, $12 packs of pork chops and whatnot. Almost 40% rise in grocery costs, 40% in fuel, which is trickling down into everything else, which is causing people to have less money. And it's going to hurt the economy until they figure something out, which in my opinion, everything the Fed and the government has been doing is completely wrong. They're basically facilitating as much as they can to these big banks and hedge funds to destroy the economy. Again, just like in 2008, too big to fail, except this time, instead of just mortgage-backed securities, them being over-leveraged on those, they're over-leveraged on the entire derivatives market globally. It is so bad. So how do we combat that as retail investors? How do you combat that as someone at work every day who just has a 401k, or you have a pension and you're taking a hit right now? This is how you do it. One, you get your money out of big banks that are ISDA related. ISDA contracts are something that big institutions use to control the OTCs in the derivatives market internationally. You've heard about it in The Big Short. And you really can't play with the big dogs unless you have one. It's International Swaps and Derivatives Association. You'll hear that come up more and more as time goes on. If you pull your money out of a big bank, that's less liquidity they have on their books to meet margin. And that's exactly what they do. They use the cash in your account to put on the books to meet margin requirements against their short positions like AMC that you're long on. Here's a case in point. Bank of America is short AMC. They own some shares long, but their puts are through the roof, and they probably have a short position that's not reported. So if you put your money into Bank of America, what's happening is they're using your cash to meet margin requirements on their over-leveraged AMC position, which is causing your stock price to go down, or your 401k or your teacher's pension to go down off of your money. We've absolutely got to stop this. I'm talking about telling your friends, your grandma, anyone you know. You should be like, man, you really should get your money out of a big bank. Go to a local credit union or a bank that is not ISDA related or related to one of the bigger banks. It's so important, you guys. They have been using our money against us in so many ways, it's not even funny. Number 2 is the options chain. I know a lot of people like to play options and they're flashy and you're making daily scalps and this and that, and that's great. Good for you. I get it. I get that some people make their engagement on YouTube and Facebook and Twitter by talking about options, but here's the deal. If you are playing options on meme stocks, no matter if you're making money or not, you are 100% funding Citadel, Susquehanna, Virtue, Wolverine, all the market makers. There's nothing you can say to prove me wrong. And I will tell you again, and Astro said this in his video when I brought up that that market makers make more money on payment for order flow than for options than they do stock, and he said I was wrong. He's completely wrong. He is 100% wrong. And that's what killed me about the video he made, is he didn't know what he was talking about before he went on it. Options contribute to the majority of all payment for order flow from Citadel, Susquehanna, and Virtue. Payment for order flow for simple stock trades, raw stock trades, grew by 13% in 2021. It grew by 38% for options in 2021. So not only do big market makers make fractional cents on every time they fill an options order, they make the market for the options. They pay your broker, the broker hands them the order, they fulfill the order, they set the options chain, and they make fractions of a penny off of that price discovery, the price difference, the bid and ask, whatever you're getting in on. Not only do they do that, but they also can see now where retail trades are consolidated. So they know where they want to play up or down. If they see a high consolidation of retail trades at the $14 strike for May 27th call options, right? Then they're going to facilitate their puts and calls to put pressure on the downside to price fix below $14 to steal your premiums on Friday. And that's why Tuesdays and Thursdays, sometime in between there during the weekday, they do a pump. They pump the stock price. They let it go to 14, 14.50. Bunch of retail traders get on Twitter and say jumping into calls. And then all of a sudden, once the market makers see the consolidation of retail money coming into that strike, they dump the price, they steal the premium, they make fractions of a penny on all the contracts, and they walk away and they have extra money to short the stock or flip another position. It's so simple and so important. And if you're going to go play the SPY or you're playing whatever, that's fine. But consolidation of retail money and meme stock options chain is why we're at the price we're at today. They've been flipping their positions since $70, right? I think for the most part, retail, I would agree that Astro said 9 out of 10 people probably play options. I think it's more like 8 out of 10 now, because as you can see, a lot of these influencers have been grooming the community to start playing more options. It's extremely obvious. Even Unusual Whales has went from where they started to putting out options flow, which is very successful. But in that, they're luring people away from the true play into other plays to make scalps every day. You know, scalping 500 here, a couple hundred here, whatever they're making. But if we want this game, if we want to fix the market and we want to win out on this game, we have got to stop feeding the market makers this liquidity from our own pockets, which they're getting from payment for order flow through options plays, consolidated retail in certain stocks like meme stocks. They're getting it because you have your money in big banks like Wells Fargo, Bank of America, and Citibank. And also their long positions. Citadel holds Netflix, Walmart, Amazon long. If you're buying products from them, you are literally contributing to the financial success of those companies that Citadel holds long. And if you have to go, I get it. I'm not trying to attack you. But here's the deal. The whole point of Citadel shorting AMC and all these big institutions coming after AMC was to crush them, to put them out of business so they can consolidate that market share into a company like Amazon. That's what they did with all the grocery stores, the other chain brands like Kmart and Sears, Blockbuster, Radio Shack. They crushed them through this endless naked shorting game so that Amazon could eat up all this market share, and then Citadel and all these other market makers and banks could just invest in Amazon and know they could make endless money. It's almost the biggest scam in history I've ever seen. They've created a completely non-competitive market by naked shorting other companies that they didn't want to succeed, so their play did succeed. And it's all going to come out in the future. So it's really important, guys. Watch the retail, or not the retail, watch the real estate market coming up here soon. They've already taken a pretty big hit. I think there was a 38% reduction in loans given out by certain housing lenders. People were firing staff. People were trying to unload houses as fast as they could at the peak. It's created an insane situation in the housing market with inflation to back, where it's causing everyone's rent to go up. It's causing people to put houses on the market that are overpriced by 30-40%. And what's going to happen is people that thought they were going to flip these houses in a 3-month period are now stuck holding a bag of 30 to 40%. So it's wild. So on that, that's my big long rant about how we can reduce liquidity for these market makers based on money that we've been giving them. And I'll cover it real quick. No options on meme stocks. They're 100% making most of their money on payment for order flow from options on meme stocks. I have several sources that I can send you if you don't believe me. Bloomberg's even talked about it. Dave Lauer's talked about it. Get your money out of big banks. Anybody that's ISDA related, they are using your money in your account as cash on their books to meet their margin requirements. That means they won't get margin called until you pull your money out of that bank. Go use a local credit union or a local bank that is not ISDA related. And 3, boycott these products that Citadel holds long. I'll take it a little easier on Netflix once they start putting 45-day theatrical release windows, which they're talking about, so that we'll see Netflix titles in theater. I'll back off on Netflix when that happens. Walmart, Amazon, though, 100% Citadel holds them long. I know it's convenient and some people have to use it, but if you're giving them your money, that's contributing to a better stock price for Amazon, which contributes to earnings or gains for Citadel. So on that, floor's open. If anybody wants to come up and talk, if you've got an opinion, whatever, come on up. We'll have a roundabout discussion on how the market's affecting you, your play, your job, whatever. Or everybody can be shy and not talk. Oh, and if you could too, please tweet out the call so people can see it. Sometimes it doesn't make it to the top of the board. I'll bring up the article if nobody wants to come up and talk. I'm going to bring up the article with payment for order flow in Citadel, which is one of my favorite articles written by The Trade. And it starts out as the headline. This was written on April 14th, 2022. The headline: Citadel Securities forks out $2.6 billion annually for payment for order flow, and most of it is in options. It's absolutely crazy to deny on a live video when you're one of the bigger influencers that this is wrong. Citadel Securities takes the top spot when it comes to payment for order flow, forking out $2.6 billion in 2020 and 2021, according to 606 reports gathered by U.S. Securities and Exchange Commission. Let's see. The second in line was Susquehanna, G1X Global Execution Brokers, which spent $1.5 billion, and Virtue, which spent $654 million in the same period. The reason they do this is because if they're fulfilling the order flow, they can front run the trade every single time. Everyone can see that the options market is 100% completely rigged against meme stocks. If you're playing volatility swings, good for you. But again, you're literally hurting the community to line your own pockets. And the whole point of this movement was to fight the man, not fucking become the man. Excuse my language. Citadel Securities declined to comment. Susquehanna had not responded to a request at the time of the publishing. So that too, Ken Griffin will get on national TV and say that retail is the reason why teachers' pensions are being drained right now, when he's betting and shorting against the stocks that are in those teachers' pensions, but they won't comment on an article about payment for order flow. Payment for order flow is banned in the UK, Australia, I think Germany, China, and Canada. But it's legal in the US. And it absolutely blows my mind that Gary Gensler is still sitting on his hands, not doing anything about it. I think the problem with him is he knows if he does do something about it, his career is over. He's treading so lightly because he knows his career will be over if he challenges the system. What's up, Jen?
Hey, Spence. What's up? What's up, Diva? How's everyone doing? Happy Monday.
Good, you too.
Oh, that was Anya.
Hey, Anya, how are you?
My baby.
She's got like a ton of like different baby alives and just random, toy babies, and she's got strollers for them and things like that. And yeah, she's just playing pretend mama.
There you go. Sounds like a productive day to me.
Yeah, we're probably gonna head outside and take care of some stuff around the garden, the vegetable garden, and
Nice.
just yard work type fun stuff.
Good time to grow vegetables, that's for sure.
Yeah. Now it's usually the time to plant them in Michigan.
Yeah.
So yeah, the threat of frost is it's pretty much gone at this point. I mean, there might be a couple like colder nights, but for the most part, it's probably safe planting that vegetable garden. So.
Well, glad to hear you guys are okay. I know there was a bunch of tornadoes that went through Gaylord.
Yeah. Yeah, one person died and there was 45 injuries. That's crazy. Now that was northern Michigan.
Yeah.
So that was far away from us, but
EF3.
was it really that? Wow. Okay. that's the weird thing about Michigan. It's like if we do get tornadoes, like because of the lakes and everything, normally they're just like, and I'm not trying to like whatever, but they're just funnel clouds. You know, they're not.
Yep.
They're usually not that bad. Um, in comparison to like Kansas or like Tornado Alley and stuff. Like I definitely would not want to live there. Those are pretty scary. But yeah, here in Michigan, I mean, like we get strong storms, and as you already know, but if we do get a tornado, it's normally like those little funnel clouds. So I mean, still got to get in the basement and stuff, anyways. But like, yeah, that's pretty it's pretty sad. But it's too bad somebody died. But I don't know what to say.
What's up, Zambada?
Hey Spence, I hope you're doing good.
You too, man. How you?
I'm good, man. I'm good. Thanks for holding the space. I love the education that you're throwing out here for the community. I'm just curious. Could you maybe help shed a bit of light on the part of options trading? Like, I'm trying to read more about it, like about selling puts and take the premium from the market maker and have the market maker pay you for selling puts into the market. And if the price goes down, then you can scoop up, say, AMC for a cheaper price. Could you just educate a bit about that? That would be great.
Yeah, I will agree. Selling puts is pretty bullish for the stock. Now, whatever broker you're using, you obviously have to have your account authorized to be able to do that, which I think is usually level 2 or 3. So if you've never had any experience with options, the first thing that's required is you have to be authorized by your broker to be able to do it. So you have to apply for that. Now, selling puts, we all agree that selling puts is bullish. My only problem with it is the price fixing is so bad that any position you take is being monitored directly by the market makers. So if they start seeing a slew of retail traders coming in and selling puts, and it's going to take a lot, they're going to change their strategy or their algorithms, basically.
Can I just chip in? Like, what do you think about? I totally agree with you, because obviously we're always getting gamed because we're the product, right? But I'm just thinking in the case of AMC, because we're such a low price right now, we're like hovering around $12, $11, $10, right?
Yeah.
If retail and the people that are like have the access to sell puts on the market, right? At this level, what's your thoughts and theories about, like, if, say, like you just said, are they not going to get desperate because we're so close to the $10 limit that if we start selling puts and they start have to adjust, but they can't go below 10 or at least lower, because then all hell is loose when people just going to jump in and buy at least 100 shares more per ape.
Here's the problem. If we have another downturn in the market or any other type of negative catalyst, we definitely could go below $12. And if you're selling puts and they land in the money, if retail consolidates around selling puts, just to steal premiums, to make premiums off the market makers, you might add to the downside accidentally in a way the market makers would benefit from. Because say retail consolidates in 2 weeks, sells a bunch of puts, the market maker sees it, and then all of a sudden you have Russia get more aggressive or China invade Taiwan and the market tanks, you're going to directly fund those puts going in the money. That's what's dangerous about it. I agree with you that selling puts is a good way to make premiums for sure. But I think overall, any options in the meme stocks is going to be taken advantage of by these market makers. Individually, now if you're just selling puts on your own and retail doesn't consolidate around that idea, you're probably going to make money, yes. But once they see that consolidated money, they're going to change their play. They're going to just say, okay, well, we bought all these puts that this guy sold. We're going to tank the stock today on failure to delivers to put all the puts that we just bought in the money. And then you're kind of screwed. You know what I mean? Does that make sense?
Yeah, thanks. Yeah, it makes sense. Thanks for clearing that. And why I'm just mentioning is because I've seen a lot of posts recently, a lot of people making a lot of money on premiums and then using that premium to buy more AMC. So basically, double whammy against the market maker. But I see your point. Like, if we all, yeah, I mean, what can I say? Like, they're in the driving seat right now.
See,
for now at least.
Yeah, if you're selling puts and you're making money on the side, good for you. But if you're selling puts and you're making money off of that premium, keep in mind still that no matter what you do, they're still making fractional cents on that payment for order flow for fulfilling the market. It's a really double-edged sword. If you're I want everybody to make money, absolutely. I'll never attack anybody for making money on an individual basis, but for the overall good of the movement, playing these options is lining your own pocket while you're contributing to downward price action by basically providing liquidity to these market makers. I will say that VW squeezed, 100% squeezed because of raw buying pressure. When Porsche came in and bought those shares in the beginning and then slammed a 30% buy order, that's what's crushed the shorts. The gamma and all the options flow you're going to need for the stock to ramp is going to come from institutions. Because when institutions who are upside down on the play see the price start moving because of nothing but raw buying pressure, they're going to have to hedge. And they're going to they're going to reallocate the options chain to minimize their losses, which is going to end up causing gamma. So,
Sam, I'm just going to say, not financial advice, of course, but, you can do whatever you want with your money. It's your portfolio, of course, But I would say if you're going to do options, just be super careful. I would suggest to everyone, to you and everyone in the room, I think, the best bet here is just to buy raw stock. Options.
Definitely agree.
Pretty scary. Yes, people do make money off options, and I've made money off options. I've also lost a shit ton of money off options. Right now, I personally have decided I'm not going to do options. That's me. That's what I'm doing. So, you do what's best for you. Me, personally, I'm just going to buy the raw stock.
yeah.
I agree. I just want to clear something up for people that might be new in the chat. Like, this is not as same as buying puts.
Yes.
Just to make it clear. So I don't want to make it sound like we're pushing options and stuff like that.
Right.
So this is not the tips that have been out from YouTubers of buying puts. Maybe not necessarily on AMC, but this is about selling puts. For anyone that doesn't know, maybe just do a quick Google and that's
if you sell a put and you win out, the price goes up or whatever, and you take the premium from the market maker, that's a great thing. Like I said, the only issue with that is when they see retail start to consolidate around doing that, they'll change their strategy and they'll end up ripping those out from under you. And regardless, if you put your money into the options chain, you absolutely 100% are providing liquidity to market makers. I think the biggest problem with these more popular tubers and the influencers are they love to do the options flow because it's flashy. More people want to learn it. They get better engagement. But from what I've seen from people who say jumping into calls or jumping into this on the options chain for the past 3 weeks have made insanely bad bets unless they're just flipping it off of volatility, which if they do, they flip off of volatility and they pull that money out of the market. That's literally pulling liquidity away from AMC. There's no two ways about it. You just funded market makers through payment for order flow. And if you're doing that instead of buying shares, you're pulling money out of the market that we've created as retail investors. What we want
just want to add that.
Go ahead.
Just to add to the conversation that, say, for example, you sell a put, right? You're able to sell a put into the market. Just want to make sure that people understand that if the put is in the money, meaning that, say you have a put on AMC for 11.50 and it goes down to 11, you that sold the put now have to go into the market and cover that, right? So you're going to have to buy, which is a good thing, right? Because that's what you want. You want to catch AMC as a lower price. So that basically, I just want to go around back to the beginning, like, because we're so close to the whole $10 range where, most apes investors would jump in on. What is your thoughts about that? Like, if that happened, more people selling puts and it goes closer to $10, and if it goes below, then you have to buy, which is a good thing, so to speak.
I think right now, us being at the levels that we had last June before we squeezed, and we're so close to two really big catalysts, which is the GME dividend stock split and 14032 executive order, not to mention AMC getting ready to be cash flow positive. If you're taking your side liquidity and you're playing money on options in a way, like you said, selling puts, it could benefit you, but you could also miss out. If they pump and dump the stock to clear out the chain in their favor, and then they decide to let it run, it's just a really bad situation where you could lose. If you're owning raw shares and the stock price goes down, you hold, you don't lose anything. If you're owning raw shares and the stock price goes to the freaking moon, you make money no matter what. You can't lose by holding raw shares unless the company goes bankrupt, which it's not going to do. We're so close to that. I would never in my wildest dreams risk even $500 in the options chain right now, considering that I know no matter if I win or lose in it, it still contributes to payment for order flow. In that, I think if you take the demand away from the options chain on these meme stocks, then what you're doing is you're slamming the chessboard off the board. We're playing chess against Citadel, and we only have pawns, and they have a full set, right? In not playing those options, which we see that Citadel is definitely manipulating, Joey Cameron's been talking about it for 6 months in his tweets. We push that chessboard off the table and slam a checkerboard in front of them, and now we're back to a level playing field. And not to mention the Gasparino, Ken Griffin, and George Noble, all within a 2-week period, were on some type of publication live saying retail is not selling. They didn't say that. I don't think they all meant to say that. I think they said it because they're worried. They are really worried that we're not going to sell out of our positions through the market dip. The market dip was where we were as retail supposed to sell so that Citadel and Susquehanna and these other institutions could flip their positions back to net neutral or net positive, right? They're not going to be able to do that because we own all the shares. They are trapped in a 5x to 10x over leveraged position that they're getting ready not to be able to meet margin requirements for. And that's why they liquidated crypto. They liquidated crypto so they had cash on hand to meet margin coming up for the 14032 executive order.
Dude, thanks for the clear information. I'm with you with the whole not getting involved in options. I was just curious about the whole selling shorts, selling puts into the market. And I think I just want to just pick your brain regard. Like, I've been really convoluted and confused about this whole gamma squeeze and if it actually is a real thing.
Yeah.
I understand how gamma squeeze works, but I'm not really sure in AMC or GME it actually have had any effect whatsoever. And I'll just try to give my thoughts about it. When we had to run up in say June, right? A lot of that was said to be and contributed from FOMO and also the consequential gamma squeeze, right? But a couple of weeks after that, once we ran up to 72, we had half a million call options going into the money, if you guys remember. And everyone was trending that on Twitter and everywhere that in 2 weeks, this June or August, whatever, we're going to have a 500,000 call options going in the money. And if you all remember, nothing happened. And what I'm saying is why I'm saying that the more I'm reading about this whole Chinese military complex collateral and every single date of that contract being pushed forward, that seems more of a legit reason why we're running up. Because I feel like these both arguments are kind of contradicting each other. We're talking about gamma squeeze at one side, and then at the same time we're talking about this executive order. pushing the market from the backside, like the ISDA contracts and all these swaps and whatnot, forcing them to cover. And that was actually moving the line, so to speak, because we've had multiple weeks where we've had, honestly, hundreds of thousands. The biggest one we had was like 550,000 call options in the money, not in general, just like in the money.
Well, think of this. Right now, they're allowed to use Chinese companies that basically are they're fraudulent companies to shuffle money into the CCP's military industrial complex, like you said. So say this, Citadel or Susquehanna. Citadel's not really popular in China, but Susquehanna calls up, says, hey, we're having margin problems. We need you to do this with your stock so we have more margin liquidity from these Chinese companies. The CCP can go in and manipulate anything they want. They can manipulate their currency. They can say they're going to shove $5 billion into a company like Neo, right? And they can basically do whatever they want to pump these companies up so it looks better for marginal requirements on companies in America. The biggest thing that's going to happen is when 14032 goes into effect, which is more or less an amendment from, I think it was like 13986 or something, that says you're not going to be able to use these 90 to 100 companies that are in China as borrowable liquidity to meet margin. So the market makers in America are going to lose a huge portion of their liquidity overnight. Margin calls are going to hit. And I'll tell you right now, they're going to expect everyone to jump into the options chain, because what they're doing is they're setting themselves up to generate a massive amount of FTDs on the day that the margin calls would happen. But they'll only do it if retail's loaded up in the options chain. If they create all these FTDs, they're going to slam the stock price down below a certain level. We might run 30, 40 bucks. But what they're going to do is they're going to slam it below the $40, $50 mark, and they're going to rip out those 50, 60, 70, up to $145 options that people think they're going to play deep out of the money and make a trades fucking bet. You know what I mean? Which he was really successful on at that point in time. But back last June, the market makers weren't watching the options chain like they were. They saw that retail was not really in it. Now they are. It's almost like they've groomed retail to get more involved in options so they can set this up for this next future price run. But 14032 is supposed to go into effect June 3rd at 12 a.m. The older one that's been amended is 13974. It's going to be revoked, and this new order is going to drop in. And if
it's pretty much like the haircut. They gave them a 1-year line of credit to continue doing their fuckery.
Yep.
And if I'm not mistaken, there's going to be around, $600 billion of collateral overnight.
Yep.
That's going to go away. Sorry to bug you again, but I just don't feel like I got an answer to that question, because what I'm saying is, like, there's been a couple of weeks back in time in 2021, was it? When we had a run-up. And the options chain was so goddamn heavy. Like, we had hundreds of thousands of options going in the money, and then on Friday, right? And then everyone was waiting for the gamma squeeze from these options, but nothing happened. I'm like, have you thought about that? Have you seen that? Because I was just worried. I was actually surprised nobody questioned that every time it happened. And we were blaming it on FTDs, right? But
it depends on who went in the money, though. Who held those options? More than likely, it was just institutions.
Yeah, that's a good point, actually.
If you're loaning AMC shares to shorts, you don't want gamma. You want the price to stay the same or go down as you're loaning shares, so you can continue to make 3-4%, in a market where people are losing 40%. 3, 4, 5% is great. And if you're also playing short on the way down as you're loaning shares, you're making bank.
But I think I remember the date was like 19th of July. Like 19th of July was after the run up. And once again, I think retail really loaded up on those options because, the hype was there. The 72 run up was there. We were still believing that the market was fair supply and whatnot. And we had the 19th of July, I think was a Friday. We had like 500 plus thousand options in the money, would translate into like 50 million shares, right? And then the next week after that, nothing happened, and people got to kind of forget about it. And then we had another big week, couple of times where we had like hundreds of thousands of options in the money. And that kind of what I'm saying is that that's segueing into this idea that like I don't really feel the options market is doing anything else but taking premium and putting in the pocket of the market maker. Like I don't really feel like there's actually something retail can do.
And that kind of what I'm saying is that that's segueing into this idea that like I don't really feel the options market is doing anything else but taking premium and putting in the pocket of the market maker. Like I don't really feel like there's actually something retail can do here with the market and with the gamma squeeze. That's what I'm trying to say.
Like no, it's not doing anything. So.
Because I don't know, I'm just so confused about the whole idea. Like, what can we actually do? And some people say like, "Hey, no, you should keep buying because we need to have this like long
based
in the
on
money in the
Porsche
long
coming in
term
and buying
to cause a gamma
solid
squeeze."
shares
some
in mass
are
amounts.
like, no, it's not doing anything.
Shorts.
So
Shorts had to cover and get out.
Well,
The raw buying pressure,
Like I said, back to the
created
point,
the biggest short squeeze
I
in
got two
history.
examples. VW,
I'll use another example.
which squeezed out
DWAC.
based on Porsche
When
coming in
DWAC
and
was
buying
didn't
solid
have
shares
options
in mass
contracts when it
amounts.
first
Trapped
come
the
up
short,
as a SPAC.
shorts had to
They
cover and get
announced
out.
that Trump
The
was
raw
going to
buying
use it
pressure
for the
created the
Trump Media
biggest short
Technology
squeeze
Group SPAC.
in history.
DWAC ran to
I'll use another
$175
example.
before they could get
DWAC.
control over it.
When DWAC
Right?
was not didn't
That's
have
just
options
proof that
contracts
the
when it
options chain
first
is
come
made
up as a
for
SPAC,
suppressing
they announced that Trump was going to
price
use it
action in stocks
for
that
the,
market makers don't
Trump Media
want to
Technology
go
Group SPAC.
positive.
DWAC
Right
ran
now,
to $175 before they
as
could get control over
retail
it.
and institutions own so
That's
many
just
AMC
proof that
shares.
the options chain
It's
is
almost
made
impossible
for
to
suppressing,
prove that we're not over the
price
legally
action in
issued
stocks that
float
market
at this
makers
point in
don't
time.
want to go positive.
It's ridiculous.
Right now,
You can't disprove that.
as retail and institutions.
So, you know, the good thing is we know the
AMC
buying
shares.
pressure is already there.
It's almost
It's just a
impossible
matter
to
of
prove
time
that
of
we're
bleeding
not
out
over
market
the legally
maker
issued
and big
float
bank
at this point in time.
liquidity, which
it's
they are on their
ridiculous,
heels
You
right
can't
now, you
disprove
guys.
that.
They have lost. Most of them have lost
So,
over
you know,
40%.
the good thing is we know the buying pressure is already there. It's just a
Go for
matter
it.
of
Can I
time
say
of
something,
bleeding
Spence?
out
Yeah, go for it, man.
market maker and big bank liquidity, which they are on their heels right now, you guys.
Oh,
they have
what
lost,
happened?
most of them
issues.
have lost
Yeah,
over
hold on, I'll try to get back
40%.
up.
Can I say something, Spence?
Go for it. Yeah, go for
I
it.
do really believe that the theory that they're running out of liquidity, and I'm not talking about like market makers, like there's some fucking dude like Kenny sitting there
connection
hacking
issues.
away on his
Hold on, I'll
computer.
try to
But
get back up.
sorry, I definitely believe the theory. Like right now, everything just running. By
I
this
do really
algorithm,
believe
right?
that
And they just
the
have to
theory that they're
feed
running out of
this
liquidity,
algorithm
and I'm
with
not talking
capital
about like
and,
market makers,
shares,
like
right?
there's some fucking dude
So,
like Kenny
yeah,
sitting
just
there
hang on
hacking
tight.
away
Once
on
this
his
fucking
computer.
algorithm
But
has nothing to
sorry,
trade,
it's
just
I
gonna
definitely
do
believe the theory.
a
Like right
total
now, everything just
reverse and
running
start
by this algorithm, right? And they just
buying
have to
everyone's
feed this algorithm
shares.
with capital
It's
and
going to do a total
and shares,
reversal, and
right?
it's going to try to
So,
hedge. And
yeah,
what it's
just
going to
hang on
have to
tight.
do is start buying
Once
shares.
this fucking algorithm has
And then
nothing
it's
to
going to hedge
trade,
on the options
it's just
chain
going to do
to try to
a
stop
total
this.
reverse
But nothing
and
is going
start
to be able to stop
buying
this
everyone's
except the government
shares.
coming in.
It's
shutting
going to do
it
a
all
total
down, which
reversal, and
I
it's
don't
going to
even know
try
if
to
they can
hedge.
do at
And
this
what it's
point.
going to have to do is
If they
start
do in
buying
retail,
shares.
if the
And
government
then
or
it's going
someone
to hedge
decides
on
to
the
come and
options
shut this
chain
down like
to
they
try
did
to
the
stop
London
this,
Metals
but
Exchange,
nothing is going
you're
to
going
be
to
able to
see
stop
the
this
collapse of the U.S.
except the
stock
government
market.
coming in
Or the
and shutting it all
IOW,
down,
like
which
when
I don't even know if they
Porsche
can do at this
put their
point.
bids in, right?
If they
the
do in
German
retail,
government
if the
actually
government or
stepped in,
someone
if I'm
decides to
not
come
wrong,
and shut this down like they did
and
the
force them
London
to
Metals
pick a
Exchange,
price, basically.
you're going to see the collapse of the U.S. stock market.
or the
Because
IOW,
the
like
Volkswagen squeeze
when
wasn't actually fully
Porsche
natural.
put their bids in, right?
Played out.
The
They
German
had to, they stepped
government
in
actually
regulators
stepped in, if I'm
kind of
not
forced them
wrong,
to like, hey,
and forced them
this is
to
getting out of
pick a
hand.
price,
You guys need to
basically.
settle this. So they kind of settled it amongst themselves.
Yep.
But yeah,
Because the Volkswagen
The only
squeeze
way
wasn't
to
actually
fix the
fully
U.S.
natural
economy right now
played out.
is
They stepped in
by
regulators
correcting the
and
stock market,
kind of
which
forced them to
means
like, hey,
retail getting
this
paid
is
what
getting out of
they're
hand.
owed.
You guys need to
Because as soon as
settle
we
this.
get
So
paid,
they kind of settled it
as
amongst
soon as we
themselves.
win, we're going to go
But yeah.
out and stimulate local.
The only
and
way to
state
fix the
economies
U.S.
like
economy
nobody
right
has
now
ever seen
is
in the history of the United
by
States.
correcting the stock
What
market,
it's going
which
to
means
do
retail getting paid
is it's going
what
to
they're
take the
owed.
bad actors out of the
As soon
market
as we
who
get
keep
paid,
over leveraging money
soon
that's
as we
not
win,
theirs.
We're
Again,
going to go
back
out
to
and
the ISDA
stimulate
Banks
local
They're
state
using
economies
your
like
money
nobody has
to
ever seen in the
over-leverage
history
to
of the
make
United
bad
States.
bets.
What
That's
it's going
causing
to
your
do
own 401k to go
is it's
into the
going
gutter.
to take the bad actors out of the market.
It's the
who
biggest
keep
scam of all
over-leveraging money
time.
that's
That if
not
you
theirs.
give your money
Again,
to Bank of
back to
America and you
the
hold
ISDA
AMC,
Banks.
or you're
They're
in
using your
California's
money
teacher
to
pension plan,
over-leverage to make bad bets.
Bank of
That's
America is
causing
using your own cash in
401k
your
to go
bank
into the
account
gutter.
as leverage to meet margin.
It's the biggest scam
while
of
they're
all
shorting
time.
the
That
play
if
that's
you give
causing
your money to
your
Bank of
retirement
America and
or
you hold
your
AMC or
investment
you're
account to go
in
down.
the California's
Omni
teacher
Law?
pension plan,
Hey, so
Bank of
what's up,
America
Russ?
is using
You
your
know,
own
I
cash
think
in
what we
your
gotta
bank
realize
account
is that
as leverage to
there are a
meet
lot of
margin.
plays out there, but in
While they're shorting
2021,
the play
all those
that's causing
stimulus
your
checks were going out to
retirement or
retail.
your
They're not getting that now.
investment
So,
account to go down.
you know,
What's up,
I think you
Amila?
bring up a good point
Hey,
that everyone's
so what's up,
really
Ross?
spread out thin.
You know, I think we got to
And there's
realize
no
is that
technical way we
there are a lot
can't
of plays out there,
coordinate
but in
without
2021,
having
all those
some kind of
stimulus
market
checks were going out to
manipulation.
retail. They're not
I
getting
think
that now.
they're out
So,
of liquidity,
you
but
know,
I'm pretty sure
I think you bring up a good point that everyone's really
retail
spread
is
out
probably out
thin,
of liquidity, which is why
and
probably
there's
why
no
they're playing
technical
options.
way we
They don't
can't
have the money
coordinate
to just sit and
without
buy
having
shares on a daily
some
basis.
kind of market
Yeah,
manipulation.
that's definitely a
I
good
think
point.
they're
That
out of
stimulus is
liquidity, but
calming
I'm
down.
pretty sure
People are
a
starting
big
to go
portion
back
of
to work.
retail is probably out of liquidity, which
That's
is
what
why probably why
I'm
they're
telling
playing
folks,
options.
man.
They
Buying
don't have the
products.
money
I think
to
that
just
hits
sit and
on
buy
buying
shares on a
products
daily
from companies
basis.
that
Yeah,
Citadel
that's
holds
definitely a
long,
good
man.
point.
Buying
That
shit from
stimulus is
Amazon just
calming down.
contributes
People
to
are
them.
starting to go
I will
back
say,
to
I think a
work.
lot of the retail who
That's what I'm
were getting
telling
stimmy
folks,
checks and
man,
was probably at
buying
home
products. I
probably
think that hits
have
on
gone
buying
back to work
products
at this
from
point in
companies
time,
that,
because I notice a lot of people
Citadel
in space
holds
calls
long,
aren't
man.
on
Buying
around
shit
this
from
time
Amazon
of day.
just
They're
contributes
back
to
at
them.
work.
I
you
will
know,
say, I
back
think
to
a
the
lot of
grind.
the
So
retail
the genius of retail
we're
is
getting stimmy
that
checks and
we
was probably
literally
at
can
home,
just go to work and
probably
come home
have
at the
gone
end of the
back to
week and
work
buy
at this
more
point in
stock.
time. Because I
Citadel
notice a
can't.
lot
The
of
only
people
way
in
they
space
make
calls
money
aren't on
is
around
payment
this time
for
of
order
day.
flow
They're back at work
and rigging
you know,
the
back
market.
to the
And
grind.
if we
So
take away
the genius
their
of
potential
retail
to do that,
is that
which
we
is putting
literally
our
can
money
just
into
go to
big
work and
banks,
come home at the
which
end of the
is,
week and buy more
you know,
stock.
putting our money into the
Citadel
options
can't.
chain
The only
and
way
buying
they
products
make
from
money
Amazon and
is payment
Netflix.
for order
If we
flow
keep doing that, that generates
and
liquidity
rigging the
for them.
market.
If we
And
quit,
if we take away
we cut off their
their
liquidity chain
potential to do
completely.
that, which
There's
is
only
putting
so
our
many
money
ways
into
they
big
make
banks,
money since they
which
don't
is,
produce anything.
you know, putting our money
Yeah,
into the
but think about
options
this.
chain
I mean,
and
you got
buying
a bunch of
products
people
from
who are still
Amazon
playing
and
options.
Netflix. If
So
we
they're
keep
losing
doing
money,
that,
and then you
generates
got people
liquidity
chasing
for
a
them.
bunch of
We
plays.
quit.
The
We
only
cut
real
off their
way that
liquidity
we
chain
could,
completely.
I don't say the only real way, but
There's
the only way
only
I
so
think
many
that we
ways
can
they
do
make
well is we
money since
focus
they don't produce
all
anything.
on one stock.
Yeah,
Some
but think
people
about
only have
this.
like
I
10 or
mean, you got a
$15
bunch
a
of people who are
week,
still playing
you know,
options,
buying one share.
so they're
They'll keep
losing
kicking the
money.
can
And then you
out,
got people
you know, down
chasing
the
a bunch
line.
of
And then
plays.
if
The
you're playing
only real
options,
way
they'll
that
just keep
we
stealing money.
could, I don't say
I
only real
don't
way,
think
but
most
the
of
only
you
way
are
I
going to
think
drop
that
out
we
of
can do
ISDA
well is
Banks.
if we
And there's only
focus
going to be a few of
all
us
on one
still
stock. If
buying
some
and
people
holding
only have
shares
$10 or
over
$15 a
time,
week,
and
you
they're
know,
just going to
buying
keep
one
pushing it
share,
down, you know,
they'll keep
kicking
kicking
it
the can
down.
out,
I
down the
think
line. And then
I think
if
on
you're
that,
playing options, they'll just
I would
keep stealing
tell
money.
everybody this is
I
my
don't think most of
plays.
these
I've
people are
been
going to
buying
drop out of
across
ISDA Banks,
Hycroft,
and there's
GME,
only going to be a
and
few
AMC
of
all
us
together at
still
this
buying
point.
and holding
I was just
shares
trying to
over
stay in one or
time,
two
and they're just
stocks,
going to keep
but I
pushing it
think
down,
so
kicking it
many
down.
people have bought
Well,
so many
I
shares.
think
We're way
I
over
think
the
on
floats
that,
anyways, the legally
I would
issued
tell
floats.
everybody
At
this
this
is my
point in time,
plays.
I'm
I've been
starting
buying
to spread
across
out
Hycroft,
across
GME, and AMC
the
all
three
together
plays
at
I
this
consider
point.
to be the
I
best, which
was
is
just
GME,
trying to
AMC,
stay
and
in one or
Hycroft.
two stocks. But I think
I don't
so
think
many
people are
people have
walking
bought so many
away
shares. We're way
like
over
how maybe you
floats
think, or
anyways, the
maybe
legally
we're
issued
not
floats.
running out of
At this
liquidity as
point
bad
in
as you
time,
think.
I'm starting to
I think
spread
if
out
anything, the
across
movement's probably
the three
grown,
plays I consider
and
to be the
more
best,
and more
which is
people
GME,
are buying
AMC,
more
and
AMC.
Hycroft.
Keep in mind
I
that
That
at
is the
first we
people are
probably had a
walking
pretty
away,
set community.
like how maybe you think,
And
or
yes,
we're not
liquidity is
running out of
probably
liquidity
thinned
as bad
out
as you think.
for
I
that
think
set
if anything,
community
the
in the
movement's
beginning.
probably grown.
But like I've got my
and
sister,
more and
mom,
more
and 5
people
other
are buying
people
more AMC. Keep
interested
in
enough
mind
to where they bought
that at
AMC
first
stock
we
this past
probably
couple
had a
months.
pretty set
So the
community,
real truth behind retail
and
is
yes,
we've only tapped
liquidity is
maybe
probably
like,
thinned out
I don't know,
for that set
not
community
even
in the
10,
beginning.
not even close
But
to
like
10%
I've got my
of
sister,
what's
mom, and
available
5 other
left
people
of retail people to
interested
get
enough to
in.
where they bought AMC
So the
stock this
liquidity
past
loss
couple
we
months.
might face
So the real
from the
truth
base
behind
investor
retail is
crew,
we've only
which is
tapped
us,
maybe like,
we're going to gain
I don't
back
know,
in buying pressure
not
from
even
new
10,
people
not
jumping
even
into the
close
play.
to 10% of what's
No,
available.
I definitely think there's
left
ability,
of
but
retail
how do
people to
how
get
do you
in.
figure out without
So the liquidity
being
loss we
accused of
might
market
face
manipulation,
from the base
focusing
investor
retail
crew,
on
which is
the
us,
3 plays that
we're
make the
going to
most
gain
sense. If
back
you don't have a
in
lot of
buying
money,
pressure
you
from
should be in
new people
HYMC,
jumping
which
in.
benefits AMC. If you have a little more money, go to AMC, like you said. And then if you have
No,
you know?
I definitely
That's
think
not
there's
really
ability, but
collusion
how
though.
do
If you
how do
say
you
it,
figure
like,
out
hey,
without
I think Highcroft is the better play for people with less liquidity. You know, and for sure, you do not want to buy fractional shares, man. If you're buying fractional shares, that is a disaster. That is how market makers are also generating more liquidity, because you don't own a legal share. You've money, and it's so crazy to get into fractional shares. But going out and just
that's
saying,
how most people do crypto, and they love crypto.
Well, they want you to jump. They want you to jump into crypto big right now. There's more commercials than I've ever seen. They need retail to jump into crypto because institutions just liquidated their positions for the most part. So they need people reinterested in crypto in the dip so they can play the swing again.
Because that was the exact thing Kenny Mayer was trying to peddle about the First Amendment rights and like manipulation, that we have Reddit and Wall Street bets and shit like that. That's exactly the what he's looking for us to somehow gather up and then deliver it to SEC and tell them, like, look, they're talking about ganging up against us. But as long as we have Twitter, as long as we have Twitter that like 4 million strong people just tweeting out their own shit, like I'm buying. I have to agree with Spencer. Like, all I see is this movement has just grown way, way stronger than the June run up. Like, I don't know. I just have a feeling I can't statistically say anything, of course, like Adam Aaron or something, but there's no way in, I don't want to use curse word here, but that we're just 4 million people, the same we were at June. Like, there's no way.
Oh, I bet we've at least added a couple million minimum globally. It's just growing. Hey, let me ask you guys real quick. Can you guys hear me okay like this right here?
Yeah.
Okay.
What up, Spence?
I got a feeling I've been yelling as I'm leaning forward into the mic.
Lucas has had his hand up here.
Yeah, go ahead, Lucas, man.
Sounds good, boy.
No, you're good. What's up? I just want to say what's up, everybody. Hey, Jen. Hey, Spence. Good to see you out here on a Monday. No, I just wanted to kind of piggyback off what OmniLaw and Zam and Spence, you guys were talking about. I mean, you have to think about it here, right? Like, this is... I personally don't think it's a battle of liquidity between certain names, and certain tickers. And Omni, I believe, is asking, how do you concentrate retail buying power through, the stocks that we're currently in? And I think the answer to that is, I mean, if you ever feel in doubt about retail investing and our buying power, just go look at the on-balance volume. And if you want to see who is selling and who is not, you go look at the on-balance volume. It has only grown since the run-up in last summer.
And our buying power,
and the same thing for GME as well. And I don't think...
Who
you got to
selling
also remember, it's been over a year. You go look at the on-balance volume. It has only grown. The concentration of buying power from retail has been there, and the same thing for GME as well. And I don't think, the on-balance volume shows that. You have to go and look, and you'll see. I mean, retail buying power is always there. The concentration of buying power, I just think that a lot of people these days are being swindled by advertising. And not a lot of people may be smart enough to filter out what's real and what is advertising. A lot of people just like to jump in and follow these accounts on Twitter who push options, who push, these insane day trades. And I'm not going to lie, like, I used to follow into that when I started getting unusual whales. Like, you see people making these insane plays. What do you want to do? You want to do exactly the same thing. But that's not how life works. You have to go out there and work for yourself, find the plays for yourself, and trust the DD that you do, and trust your conviction. I think all of us in here in the space call right now are convicted, or else we wouldn't be here at our own local time on a Monday watching the stock and talking to each other about all this crazy shit that's going on.
No, man, you're totally right. And I agree with what you're saying. Like, there's so many phony accounts out there just pushing a narrative of spreading out your liquidity on other stocks. I'm not going to tell people what to do with their own money, but, like, I definitely agree with, where's this dude, that we should focus our money into these main games, main plays. Because my thought is like this, like, I wouldn't dare touch any other stock that's not AMC and GME until this fucking shit is over. That's what I feel like. Like, the whole idea with this is the movement to make markets fair. Like, as soon as this is not fixed, you just literally is giving your money away to the corruption again. Like, that's how I feel. Like, there's a lot of plays I want to do, but I don't feel like touching anything until this is done, so to speak.
Well, on that, we've been in this place so long, and suddenly I see bigger name influencers jumping off, talking about this and that. I'm playing this and that. It's like, man, you made your following on the back of AMC and GME, and we're so close to the finish line right now. It's time to focus up for a little bit, get back to the basics of the play, and put the pressure on these market makers. And if you choose to do that as an individual, then there's no collusion to be had. I'm doing it all as an individual. We're just here talking about the situation.
Yeah, I mean, as far as collusion, look, I mean, Ken Griffin said in an interview, it's borderline, market manipulation when you're going as far to say you want to hurt other people through a short squeeze. I mean, listen.
That's a great impression.
We have something that they don't, and that is the guts to come out here in public and talk about the stocks we like. They do it illegally, behind closed doors, with nobody else knowing. So listen, we're out here in the forefront. Anybody, obviously they're listening to space calls. If anybody has seen that, they're in here, they have bot accounts, pushing shit, whatever. But you know what? It's just, it's funny. They're so close. They're so close to giving out. You have to look at Citadel, man. I mean, almost $70 billion worth of securities sold, not yet purchased. I mean, if you think that retail is out of liquidity, look at their balance sheet and you're just going to see how fucked they are. It's bad for them right now.
I'm actually bringing that up on YouTube right now, and it's a really good point, Lucas. I'm glad you brought it up. Let's see here.
But we have nobody to enforce that shit.
Well, what collusion is Ken Griffin giving Gabe Plotkin $2 billion to meet margin requirements so their position didn't get blown out. Because what was going to happen, and what Citadel was worried about, was that Plotkin's shorts on the IWM were going to blow up. So 2 weeks after we have a $34 run on AMC out of nowhere on March 31st, Melvin Capital announces they're going to wind down their position. What they did was they covered their IWM shorts. Citadel came in, planned it. They knew they were going to cover. They said, we'll use this to let it run up. We'll reopen shorts at 34, and then we'll knock it back down with FTDs and premium thefts in the options chain. And they did perfectly. That's market collusion. And I'll tell you, the DOJ and these other entities that just announced they were going through phone records and like WhatsApp messages to figure out who's been talking to each other, which some funds already got busted for using WhatsApp to collude on stock trades. It's going to be big, guys. What's up, Justin?
What's happening, guys? Oh, just hanging out, watching the price action, and I'll just comment. There's definitely a lack of liquidity in the market. I mean, you see it. I mean, I'm watching SPY, and these pumps are just like no volume.
Yep.
At all. There's nobody in there. It's all algo. If you just want to see it, go look at the 15-minute on SPY and look at the volume candles. It's done nothing but descend from open, and it's just asking to get wiped out again. So they're just playing this in to get people's premiums.
Yep.
Everybody's like, oh my God, SPY's gonna rip. It may rip for a little bit, but watch that 3 o'clock or that lunchtime hour.
Well, they've noticed retail has consolidated into the SPY playing options because everybody and their mother is talking about playing the SPY nonstop on Twitter.
Yeah,
dude, can I comment on that? I just have a good laugh for y'all today on this Monday. So I got a buddy, right, who he's one of my best friends. I worked with him for over 5 years, and he originally got me investing through the Stash app like 7 years ago. It's fucking hilarious. But nowadays we have a group chat with me and him and a couple buddies, and we talk about the SPY every once in a while. And this motherfucker, man, I mean, I tell you what, he'll throw $1,000 at the SPY in a given week. And I think he's been doing this for about 5 months. The man has never taken profits. I mean, he sent me like he is the epitome of a Wall Street bets. Like, yeah, I just come here to lose money.
Degenerate.
Yeah,
he's the GOAT dude on Apple puts.
Yeah, I mean, he sends me the funniest memes, and obviously he's making fun of himself, but I just die laughing. And I try to tell him, man, listen to me. I know you're holding AMC long. I know you're holding GameStop long. Add to your position, man. What are you doing? You're sitting here wasting your money on the SPY every week is what they want you to do, man. Like, come on, dude. I asked him seriously. I was like, how much are you spending in a given month playing options on the SPY? And what's your PL? And he's like, dude, you don't want to know. He's like, it's bad.
And that's
he's fortunate to get paid well to afford to do that kind of shit. But like I told him, man, I'm like, you're just an idiot at this point.
Own the stock, man. Own what you pay for.
Yes.
That's the most important thing you can do right now. We've had, I would say, 75 to 80% of the downside the market is going to see unless they decide to absolutely just crash the market out, which I think the worst case scenario crash situation would be the pandemic bottom. I'm not sure we're going to go below the pre-pandemic high. But the problem is I've noticed all the big influencers, all the big names on Twitter and YouTube had just out of nowhere the past 3 months started pushing options like it was going out of style. You got to understand that a lot of YouTubers that have a big following have to make content that's going to keep people engaged, which might go against what they actually want to do. It's a conflict of interest because if you don't keep people engaged, you're not going to get your money. This whole thing where everybody is suddenly playing the SPY, and if you're making money on it, good for you. But everybody in the ape movement has started playing the SPY puts and calls and whatever you're doing. It's diluting the movement. That's what they want you to do, and everybody's fucking falling for it, man.
Dude, listen, I'm gonna tell you something. I don't watch anyone on YouTube anymore that doesn't speak DD. Like the main people I watch is like Boss Blunts, AMC Bigums, and that's it. Pretty much a Randall Cornet. Like they never push any goddamn contracts, any spreads or any bullshit. They just spread information, and that's what we need. We don't need more tips. You know, like everyone is the best in the world to tell other people what to do with their money. Like, please, we just need more information.
How many times has the Wyckoff method or fractal theories or any of this fucking led to a correct call in the past 6 months, man? The play is so much more simple than that.
I mean, anyone that thinks that technical analysis will do any, I get you can analyze it, but it's not going to do anything. And then the thing is, the reason I got on Twitter and joined space calls is because I really want to dig into conversations about what could actually help the movement. That's all I want to do. Like, I do enjoy space calls where we don't speak anything about the stocks or stuff like that. But the main goal is like, you know, in my real life, I'm a problem solver. Like, I don't like just being stuck in a hole. Like, I want to talk about how to get the fuck out of this hole as soon as possible, and who can we reach out to make that happen, right? So I'm just frustrated by one thing, and I don't know if you guys feel it too, but I wish like more financial more financial professional people were coming out and joining our side. We do have people like Dave Lower. What's the name? Dave Lower, right?
Yeah.
Lower. Sorry, I'm not English. I'm American. Lower. Sorry.
Dave Lower.
That last name is him, and Mark Metzler, and you got these other like more professional people. I wish we had more of these people coming in and giving us a look behind the scenes of what all these plays mean, because I think a lot of this opacity that's in the market is making it really hard to understand. Like, what does it mean when they push the FTDs? Who's going to enforce that? What is, like, someone that actually day trades for this for bigger companies would be nice to have on your side that can explain, like, they're doing this, they're putting it away here for certain. Because for a lot of times it just sounds like theories from our side, right? Because we can't really be 100% sure. I feel that's really frustrating.
Absolutely, man. Go ahead, Lucas.
I have like a theory, what you said about, professional investors and finance people not engaging with the community. And there's a couple things that I think about it. And I think, there are a lot of professional finance people who are invested in these long plays who are in the shadows, who refuse to come out of hiding until probably this is all done for either A, personal reasons, or B, professional reasons. I think also in scenario number 2 is a lot of professional finance people refuse to interact with the community due to the nature of misreporting by not only mainstream media, but other media outlets as well. I mean, if you look at the ape movement, I mean, we know what we're doing here. I mean, we're individual investors who like the stock at the end of the day, right? But we know what we're doing here. And this is a movement where you're going to see a lot of bot accounts, spam accounts pushing really dangerous narratives. And you're going to see a lot of, like Adam Aaron said in his last, conference call or investor call, a lot of apes have been attacking him. And, some rightfully so, some not. But when it comes to violence or threats or any real harm comes to light, either through misreporting or through actual real reporting, professional investors and finance guys aren't going to touch that. They're not going to touch that with a 30-foot pole. So
no, I get it. A lot of them are just afraid, of course, breaking contracts or just going back to work on Monday, like that Bloomberg reporter said. But I just wish that a couple of them grew some balls and joined the right side and want to be on the right side of history when this shit blows up.
And I think we all will. It's already blowing up. We have massive amounts of liquidity that have been suspended in China already. We haven't even seen the full scale of the defaults from Evergrande. The U.S. Treasury, Janet Yellen, is talking about denying Russian debt payments now. Sri Lanka's economy collapsed. They're talking 40% inflation. Most of the expatriates that are out of Saudi, there's like a 90% rate for them working in Saudi Arabia. So the workforce is going to get hit in the fuel and oil industries really hard. Inflation in the U.S. is through the roof. Cost of living's going up. Housing market's going to tumble because of it. Banks are going to stop giving out loans. They've already started that. I think Wells Fargo laid off a ton of people in their loan department. They know for the foreseeable future, there's not going to be very many house loans going out. So
yeah, just the fact that we're not in peak COVID and the economy is going down should be enough. Like things are going back to normal and we're crashing. It would make sense when we were doing peaking COVID, the market was crashing, but now that's all you need to know. Like, we're crashing when things are going back to normal.
Well, the liquidity has been drained out of the market through, Netflix and Facebook. It was a bubble, man. It was a social media streaming bubble. It was like the .com bubble all over again, which created a bad scenario for the rest of the market. But here's the thing. All the liquidity in the market's locked up in purgatory right now. The hedge funds are extremely over leveraged, probably 10x, maybe more. Our money's in the market stuck into plays. We're not selling. All that money is in AMC right now, right? So all this money's stuck in purgatory. At the end of the day, somebody's going to win and somebody's going to lose, and that money is going to become one-sided at its true value, which is going to be retail. Hedge funds have to close their shorts, and like Lucas said, Citadel's got nearly $70 billion in positions sold, not purchased. Their books, as of their last annual, showed that they have $5 billion less dollars in debt than liquidity. So their total standing right now is almost near 100% illiquid. Their books look like absolute crap. Ken Griffin coming on TV is a bluff. He's trying to blame retail. He's trying to break up the movement. And if you notice when he speaks, he always winds up what he's going to say like it's some kind of like legendary wisdom. Like the dude's a total fraud, man.
And he never blinks.
Yeah. Well, and this is how it is. They ask him a question, and what he does is he goes, well, in reality, in the grand aspect of things, you know, he's just a fucking fraud, man. He's in so much debt, he doesn't know what to do. That's why they've got people locked up in buildings working for Citadel. They've got people out here trying to break up retail. We own over $1 trillion in the global markets that is not leveraged. $1 trillion compared to another $1 trillion that's leveraged at 4 times, we win every time. We actually have the money that we put in, right? Citadel and Susquehanna do not have the money they put in. They've used the money they had on hand plus 3 to 4 times the money that they don't have on hand. That's what's going on right now. It's very, very simple, very binary, and people are overcomplicating it. Buy the stock, hold the shares, sit and wait until they finally fall apart, which is going to be due to some type of catalyst coming up soon, whether it be GME or Fort or the executive order. So, and not to mention, like I said, you guys, MBS, mortgage-backed security products are coming up in the news again. And that's like, to me, the most hilarious thing I've seen ever, especially since the Evergrande default isn't even complete yet. You have tons of Chinese businessmen who are buying up American properties left and right for the past 10 years. I don't know why or how, what they were doing, what they think they were going to accomplish from it. But right now they're getting ready to hold an extremely large bag. That's why Zillow cut off purchases and started unloading properties not even, 3 months ago? They know it's coming. There's a massive, massive hole in derivatives. They're over leveraged on securities. They're over leveraged on mortgages. It's all going to come crashing down, and the only one's going to be standing at the end of it is retail, because we didn't bet more than we had. Blah, 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 blah. Rant.
No, it's okay. I'm glad you're ranting because I'm trying to help fix my daughter's bike. The brakes aren't working. And I have no idea what the fuck I'm doing.
Yeah,
so,
Citadel's brakes aren't working either. You might want to shoot over there. And...
Right. I don't know what I'm doing. So I've been like trying to work on it the last half hour and it still fucking doesn't work. So
Citadel looks like a Nikola vehicle right now, just rolling down a hill.
Yeah, I just wanted to say something regarding, I know we were talking about like other plays and, you know, retail investor money getting spread out. You know, you have to remember, I like to always think back to, Spence said this, I can't even remember how long ago it was, goddamn. Spence said, Citadel has a hand in every facet of this market. You know, thinking there is just one play is a very, very narrow-minded thing. We know what the main plays are. We know what started this whole thing off, what got the massive attention. But you have to remember, Citadel has billions of dollars worth of, you know, securities sold short, and I'm guaranteeing it's more than that. And it's not just all AMC, it's not just all GameStop. And regardless of what stock you're buying, if you do the DD yourself, if you trust your play, you trust your conviction, that's on you. You know, that's your investment. You know, you don't have to have somebody influencing every single investment decision you make. You know, obviously we like the concentrated buying power between, you know, our stocks, but it's never going to be just that. You know, we're never just going to have our you know, AMC, GameStop, HYMC, BBIG. You know, it's retail investors are retail investors. And if you do the DD yourself, if you come to the conclusion yourself, it's your investment. So don't ever feel bad. Don't ever let anybody in the ape community make you feel bad for a personal investment choice that you chose to make. You know, that's what I wanted to say going back to that. I just had a random thought of that in my head.
Absolutely. Go ahead, Jay Brett. What's up, man?
Oh, Italy had his hand up first.
Oh, go ahead. Sorry, I went to grab a water bottle. I don't know who was up.
Yeah, anyone speak. Italy, if you want to go. Jay Brand.
Hey, can you hear me?
What's up, buddy?
Yeah, I might lose connection. I'm just at work in a cement building. Yeah, I heard you guys were talking about houses crashing.
Oh, yeah.
But is that more for the American economy or is that Canadian? I'm a Canadian.
From what I saw, Canada might be first, but I can't guarantee that because the housing prices in Canada have gone so far out of control. I don't even know how to attack that.
So I saw some articles recently, I keep a fairly close beat on housing as much as I can. That was talking about Canada having a really epic housing crash looming ahead. I think it was a Zero Hedge article posted a while back. But the other thing that Spence kind of touched on a lot of the different issues with housing markets and touched on how Chinese investors have been pouring money into the markets, and it's very apparent if you look at the Vancouver, BC area in the last 7 years, and you look at then also the Seattle market as well. And the point I was going to drive to here, try and keep this short, is the U.S. government has been propping up the American housing market for the last 12 years, or actually probably 14 years at this point, maybe 13, right around when everything collapsed, they started to pump money into the markets through purchasing MBSs. And they've been doing that now, since the housing crisis began, when we had our last crash. So as they pull their money out and stop buying MBSs, there hasn't really been any bidders to buy up those securities because it's not profitable to hold that to hold all that debt, that mortgage debt. So when June 1st rolls around, there's not going to be any bidders on mortgage-backed securities, which is going to drive the prices down, which is going to cause the derivatives market to go kaboom. So, it's a ticking time bomb.
Exactly.
Well, I'm just seeing inflation, and that should drive up any asset, including houses, gold. But yeah, you're talking about a little bit more than I understand.
Yeah,
and naturally things should just cost more if they print money. But I think it'll eventually even itself out. Sure, there'll probably be a downturn, but I think Canada's pretty protected, and a lot of the loans that are getting issued have they're protected, they're risk protected before they're given. So can you withstand a 5% increase on your mortgage? Yes or no? They're giving it out or they're not.
Don't kid yourself. Don't kid yourself about Canada. It's a complete shithole, and a lot of those loans are just no good, and the banks are all inside out. So if you think for a minute Canada's anything, short of Arctic Mexico, you're kidding yourself. That place is going to be the first to go. The first to go.
So happy to have you here, Mark. I was just saying that we need more people that's in the business that knows the ins and outs to give their perspective on things. So,
I put a lot of weight on what Mark says for sure.
Nice to have you back, Mark.
Well, I'm good and agitated, and I'm trying to get off some form of disabled list, and the market is so broken, and it's so obvious what's going on.
Yep.
Figured, you guys have had this trend for some time, and it's kind of playing out bigly.
We already placed our bets.
Yeah, no, that's right. But it's something to watch how Tiger Global, which at one point had somewhere between 60 and 80 billion with a B under management, is down a number beginning with a 6, as in the 60s, and that's before they mark their privates properly. And all these guys giving the apes and Joe Sixpack and the retail investor shit with everything that's gone on it's just beyond rich.
It's interesting to see what they hold long too right now.
Well, it's just the thing that you guys should sort of, get together and push the theory is, why wouldn't you just take out Melvin 15, 16 months ago? He was a zombie back then. He needed to get bailed out by Citadel and SAC. Well, why not just clip him then? And then the markets could at least recover and be non-broken. People in the AMC GME trade would have made their money. You put Melvin in a pine box along with his buddies, and everyone passed it. So now you've gone 15, 16 months. Melvin's going out of business. All these hedge fund guys in these bets are getting destroyed, and no one still has gotten to the bottom of the buy button deal. It's just
their egos are like terrorists.
Well, it's incredible that no one just simply backtracks the timeline and say, why? How are we here? Why are we here? And how is this shit allowed to go on for as long as it has? Because I've said countless times, nothing's changed. The same shit could happen again and again and again, and it's happening. It's fascinating to me. Just fascinating.
Well, if they wouldn't have bailed out Melvin, everything that we've been saying for the past year would have came true. Ken Griffin had to secure his position.
Yeah, that's exactly right. And it's not a conspiracy theory either, because Melvin was bust back in 2021, and he's out of business in 2022. So why delay the process? If you would have had his kind of problem, Spence, I guarantee you they would not have bailed you out.
Nope.
They would have.
And if you would have gave me money to fix my problem, SEC would have been at your front door.
Exactly. So what's good for the goose is good for the gander. And, I don't want to hear about free markets and all this other bullshit until they just fix obvious things, just simple things, and quit discriminating against regular people. So
regular people that are clearly smarter than these people that they keep bailing out, honestly.
Well, that's the irony of the whole deal. The irony of the whole deal is who's considered smart and who's considered dumb.
Whoa, wait. Gabe Plotkin, guys. Gabe Plotkin. Who said it now? The greatest investor, right? Our generation?
They're
stock. Yeah, except he says he's going to start another fund and then goes, oh, well, yeah, he wants to try to collect his management. And if they would have fixed things back in January, that would have been too complicated that nobody can understand it, and that everybody's blind. It just goes, well, I think it's working, but it's not. There's just fixes that continue to happen.
They're sock puppet CEOs, Justin. These funds.
100%.
Sorry, my neighbor's outside blasting his crappy music. These sock puppet CEOs and these other funds and companies are put in place to do what they're told by bigger institutions, man. Plotkin was nothing but Ken Griffin's little bitch boy. That's all he was, man. That's why Ken Griffin had to give him $2 billion to sustain the bad position while Citadel decided what they were going to do with theirs. If that's not insider trading and collusion, I don't know what is.
And then
100%. I don't know how it keeps getting peddled that there was no conversation between them. There was.
Well, and then the problem is with Citadel as a market maker in the options and things like that, they were able to sell premium on both sides to hedge themselves out and just collected it. No issue whatsoever. I mean, if you knew where the order flow was, and you had those trades, you profit huge by selling volatility, knowing full well exactly what the outcome is. I mean, it's just this isn't
100%.
this isn't like trying to land rockets in the middle of the ocean. I mean, it's just all there. And when Plotkin served no further purpose, he's closing down. But is he going to give back the money he made in fees where he bought the Charlotte Hornets? Is he going to give back the money where he bought his place? Is he going to claw back anything from his investors who he hit big time with fees and taxes? No, that's the scam of this. I mean, Spence, if you did this shit, they'd lock your ass up, right? I mean, if you
sounds like it
made all
some dogs getting
dogs getting into it there, huh, Mark?
Yeah, there's guys in long trench coats at the door trying to come in and silence me. So my guard dogs are out there.
Yeah,
but I mean that's the whole that's the paper here, and hopefully changes will be made so this shit doesn't happen again.
Well, I don't think nothing's gonna change until these clowns are gone, until they've completely collapsed, and the market makers like Citadel, they need to come out and basically put a stop on them being market makers altogether.
Yeah, they're purely abuse.
It's such a monopoly to own 3 different sectors of a same company that trades, makes the market, in banks. It's a monopoly. It's crazy to think it's even allowed.
Trades make the market,
and now
has
let's
bank,
get it
has the banks, and has hedge funds.
Yep. It's
Mark. Mark, I want to ask you a question since I have you here in the chat. What's your view on all this DD and research and everything that this ape community has uncovered? Do you feel like what I'm saying is from your perspective, are we on the right track? Is it legit, or is there anything else you want to add to it?
Well, first of all, the markets are horrible. Okay, the markets are broken. They're horrible, and it's been impossible to make money other than a couple sectors. And if you're in the couple sectors, God bless you. You've done well. But in terms of DD, I mean, clear what I've done about had an opportunity to do some.
We're losing you, Mark.
And it's
manipulation.
You hear me now?
Yep.
You hear me now?
Yes, sir.
In terms of the DD, I think I've inordinate amount of work on Overstock and a VIX, Camping World, which is paying $250 a share in dividends, and all 3 of those stocks have been horrible. So
I just gotta say,
I think I'm right.
Marcus Lemonis.
Marcus Lemonis is just a badass motherfucker. I mean, Marcus Lemonis in a couple. Well, the thing about Lemonis, I think that people really don't understand, and I know him well, and he is a friend, is the amount of time and money this guy gives of himself. Is forget the TV shows and forget him giving away shit on Twitter and forget him running Camping World. This guy has helped a shitload of people for a very long period of time with his time and generosity, and he's a tremendous fellow, and he's a great operator, but he's a better person than he is an operator, and he's a hell of an operator. So I'll just collect my dividend. I think he keeps growing that company. I think he's doing really well in a shitty environment. Stock will eventually take care of itself. But in terms of due diligence and the apes and the strains and the misinformation floating around and people in it for themselves, it's sort of sad to see where things have evolved. But the crew that's hosting this call and a few others have done a bang-up job trying to keep it all together. And you guys are all collectively far smarter than these institutions who people think are so great. You guys have done a far better job. I mean, I listen in on these things because I can learn more listening to you guys than the so-called clowns on TV. But I don't watch TV. I just watch roller derby, wrestling, the rifleman, you know, things like that.
Good stuff. Yeah, you know,
Hey, Mark,
they call us dumb
Hogan's
money,
Heroes.
but we're a consolidation of engineers, doctors, degree paths, all the way from burger flippers to freaking physicists, man. And they want to call us dumb money and try to consolidate us into a certain group. They want to make us one group, one definition, that we're just living in our mom's basement, to discredit us. And they fail every time they do that. It's like Ken Griffin saying that we're the reason teachers' pensions are being drained. Well, it's funny that these teachers' pensions are investing in AMC, and he's short it. So the guy's a complete fraud.
The funny thing is, he says teachers' pensions, right? That's his buzzword, teachers' pensions, from guys with trying to bust hedge funds. Well, 5 to 15 years ago, people used to say widows and orphans. Well, first of all, widows are not invested in stocks like this. And 2, to just be factual, orphans have no money. So orphans aren't in the stock market. I mean, it's just like, let's just get a grip and let's just call this for what it is. And not just try to bullshit people with rhetoric. And then someone went to the guy at Bloomberg to ask the question, and the Bloomberg guy gets on TV and he says he's not touching it because he wants to have a job come Monday. I think that was
all right.
Right? And
that was beautiful.
Right.
That's a problem.
And made it to Twitter. So we work in the mainstream media, right? We're paid to be, we're paid for commentary, and we come out and say, I'm not touching that issue because I want my job come Monday. I mean, really? I mean, this guys is where you guys want to take it to? You're staying quiet because you want your job come Monday? Okay. Then why are you fucking in this business to begin with? You dumbass. You know?
Did you see the Ken Griffin interview? And what was your take on that?
Well, first of all, it's all staged. Mm-hmm. And the questions are prearranged and given to him. And I thought to discretion. Right. And I thought it was laughable. I mean, anytime they want, I'll ask Ken Griffin questions and they can put it on Bloomberg. Bloomberg knows where to find me. I mean, why don't we have real questions from real guys and attempt to try to get real answers? I mean, that could, at its core, move the needle. You know, question 1, do you have any regret in giving Gabe Plotkin $2 billion when he was 4 days away from failing? Question 2, do you still think Gabe Plotkin is one of the greatest investors of our generation? Question 3, what are Gabe Plotkin's returns since inception after fees and taxes? You know, let's start with those 3 and see how Boy Wonder handles them.
And why did he speak out against payment for order flow back when Bernie Madoff was the king of it, and then took it over now? You know, that's a good one too.
So people are just much better off listening to you all and hearing what you have to say on things and what you're thinking than a guy like that. And again, what's smart money and dumb money? I mean, I'm long Overstock, which has been a disaster this year, Camping World, which is a disaster, and Enovex. And I think I'm a smart-ass motherfucker who does his work. Wow. And I feel dumber than mule shit this year.
Well, look at Overstock, shorted 21%.
Well, those guys are going to be swinging from a tree one day. Yep. But I wake up every day thinking how fucking stupid I am. And I am not a fucking dope. Okay? Because the market has a way of humbling you and showing you from time to time how wrong you can be. Right? So anyone who's long resource stocks or not long the market or in any of this other stuff. Far smarter than me. Far smarter. So all these guys saying that you guys are dumb money, how about that goitered-looking clown whose top pick is Netflix, who thinks AMC is worth zero? That guy makes me look like Einstein this year.
You want to know what's dumb money? And Mark, this is a question I had for you. I originally had a question for Jay Brett, but my Twitter's been acting up. Why did BlackRock, if they were the economic advisor to the White House, why did they not make sure that this retail movement squeeze process moved up faster for the capital gains tax? That's, if they were the largest institutional investor in both GameStop and AMC, why did they not advise the White House of how much money could have been made on taxes had this played out a year ago? Like you were saying, maybe 10 minutes of baseball.
You can't raise taxes on capital gains into the election year. I mean, back on a podcast that I did a year and change ago, I said, forget the capital gains tax. What the government should put in a leverage tax. If you use excessive leverage, you should be taxed.
That's brilliant.
And it would have saved the markets. It would have helped the economy. It would have helped the government. And I said, it has no bearing on interest rates. All you got to do is tax excessive leverage. Let interest rates go wherever they want. But if you use excessive leverage, like the hedge funds, like the banks, like Ken Griffin, like the broker-dealers, tax them for it because they put the system at risk. So now the system is at great risk because of the leverage. Things are unwinding because of the leverage, and everyone sits there with their thumb in their ass. And I gave all my plans to Warren and all of Warren's staffers and Sherrod Brown and Sherrod Brown's staffers, and these guys did fucking nothing because either the lobbyists or the banks or all the donors said this is a shitty idea. It's a great idea, but it's a shitty idea because it taxes them and not you guys. It's much easier to tax you guys through gas tax and things like that, where you pay at the pump every day. That there's big tax in gasoline. So
yeah, at the end of the day, it's all about money flows, right? And about Warren and others keeping their jobs. Warren's been in office since before 2008. She's one of the over 40 shitty, people who have been elected to office who have not done jack shit to fix our markets in over 12 years.
And the crazy thing is, I actually like her. I actually think she's the best of the bunch.
Yeah.
Right? Seriously. I think she completely understands the issues. Totally. But they don't have the votes to pull this shit off. They just don't.
Yep.
So if they don't have the votes, they say, why waste our time? Let's waste our time on things where we can then get reelected. But, again, I'm not political. I'm not religious. I'm a whole lot of things I'm not. But I'll tell you this.
Thank you for answering that.
I'm proud of you guys. I'm proud of you guys for putting on these calls and doing things. And you've really stayed after it. And you're helping a lot of people out. Spence, Jen, all you organizers, JB, the whole crew.
Well,
so
we're here to fix the markets, man. It might take a long time, but I'm 99.9% confident we're going to win out the day. That's for sure.
Yeah, you're going to win out today. There's going to be a bunch of stuff between here and there, but I think at the end of the day, people will look back at this time and say, man, was this ever
You're breaking up again, Mark.
I wanted to check. Yeah, I'm gonna get my ass out and try to get some shit done, but I just wanted to check in and just say stay after it.
Right on, man. Thank you for coming in.
Thanks, Mark.
Yeah.
Yeah, thanks, Mark.
Take care, everybody.
Thanks for answering our questions, bro.
Yeah.
Get better soon, Mark.
Yeah, that's going to take some time. See ya.
Later.
Hey, Spence, do you mind if I ask Jay Brett my original question real quick?
No, go ahead. It's open floor, guys. Go ahead.
Cool. No, I appreciate it. So, Jay Brett, I've been following you for a while, ever since, probably about a year now, talking about just the economy and stock market and stuff. And relating to the housing market, I remember you saying earlier in this call when you first joined about housing market collapsing in Canada and both, United States. And as a millennial, trust me, I would love for this to happen. But I just have a question regarding, do you believe the Fed will actually stop tapering its purchase of MBSs? And if they do so, will stagflation cause housing prices not to collapse? I'm only 25. I have about 7 years investing and not a lot into economic research, but I try to do much every day. So I just want to hear your opinion on that.
Yeah, I mean, that's a tough question because, the Fed was supposed to start tapering a long time ago, and clearly they still haven't really done that. So
it makes me laugh.
It's funny if you understand what's happening.
Yeah, the Fed is all talk, and what they're trying to do is they're trying to change things in terms of rhetoric because they know that if they say things that sound scary, that the markets are going to react to that as opposed to them actually taking action. I mean, we're kind of at a point though where they have to either shit or get off the pot, if we want to use a phrase. And they're basically being the longer they keep putting this off, the more into a corner they get pushed. And I don't see it getting. I don't see them actually being able to actually taper their balance sheet for very long. Because, it seems like if you follow a lot of the different, people doing analysis, I think a lot of them agree, and I kind of feel the same way, is that they're going to get into it, maybe a month or two at tops, and then they're going to go, oh, we really fucked shit up. Okay, let's go back and let's not do this anymore, and we're going to actually take rates back, back down. And go back towards zero again because this screwed up because they did the same thing in 2018. So, but at the same time, the conditions are far worse now than they were in 2018. So them backpedaling isn't going to really do much for them. So at the end of the day, not buying or rather tapering their balance sheet when the majority of the purchases for MBS has been them would. If they actually do cut off their purchases, I feel like the bid falls out of mortgage-backed securities.
I couldn't agree more. I really appreciate that answer. I mean, I feel the same way, and I follow this. I follow this guy named Peter Schiff. He's pretty controversial. I don't agree with everything he says. He's a big gold bug. But I mean, it really points back.
He's a very big anti-Bitcoin person too.
Yeah, I know, and whatever. I don't listen to everything he says, but I really appreciate his stance on the Fed, and it goes back to what he said, I think 4 years ago. I mean, when the Fed really started ramping up QE, it's not going to be QE 1, 2, or 3. It's going to be QE infinity because even if they have to taper short term.
You cut out there, Lucas, but I think you were going to say QE infinity, right?
Yeah, no, that's exactly what I said. Yeah, it's going to be QE infinity because even if they do start to taper short term, they're going to realize that the system that they've propped up doesn't work unless they keep propping it up indefinitely.
Yeah, that's a problem with the infinite Ponzi scheme.
It might be mine. Was I cutting out for everybody?
No,
I heard
you clearly.
No, you're good. I mean, Jay Brett, I was just saying, yeah, I mean, QE infinity goes back to what Peter Schiff said, I think 4 years ago is when he first came up with that thought process. And, he's famously known for calling the 2008 housing bubble years before it happened. I mean, and he was right about it. And this going forward, he talks about QE infinity. Yeah, I think it's hard, and I'm just worried as a millennial, right? I mean, I'm sure a lot of people, I'm not the only one in this community, but I want to be able to buy and own a house. I'm 25. I'm nowhere near my means to be able to do so. I mean, hopefully after this all pays off, it works out. But QE Infinity going forward, I mean, I see Jay Brad just disconnected. But
yeah, I don't think he could hear us. I'm going to try to get him back up. Yeah. I could hear him. I don't think he could hear us.
You're good. I want to hear what Sam had to say. He was going to say something.
Sorry, yeah, I just want to add to what you said because, on the books, right, they have $9 trillion in mortgage-backed securities, and they've been talking for months that they want to slowly off-put them, not even stop buying, just remove, right? And their calculation was 90 billion per month, and someone did the calculation that would take 8 to 10 years if they started tapering in that pace, basically. Which, I mean, 9 years of an economy going down and off-putting the MBSs, of course we're going to see a crash in the housing market. Of course, this is not financial advice, but I mean, given the logic, if they're going to have to dump their MBSs, which they hold over the couple of years, there's no way somebody wants to buy them. And even other people have been looking at these other banks selling each other's MBSs. Nobody's buying. Nobody's taking the bid. Nobody's taking it.
Yeah, that's a good point. No, I mean, yeah, it's really crazy. I mean, my grandparents bought a house in September of 2020, and that was the year of the COVID, quote unquote V-shaped recovery, which is honestly laughable. But they bought a house then, and it's almost doubled in value already. And I mean, we have done some work to it, but it's crazy for me. I mean, the millennial expectation now is, I saw this funny meme. It says, millennials' American dream now is to own a shed, on their parents' property in the woods. And it's or own a, they're going to live in a van by the seaside. And it's how real is that? I mean, my girlfriend and I talk about buying a van and traveling the country, and that's what we're going to live out of. And, that's cool and all, but talking long-term here, we all want to own property. We all want to own, our own piece of land and build a house and, have a a nice, comfortable life. I don't think anything that we're asking out of this is unreasonable. And it just goes to show you that no matter what side you're on politically, the Federal Reserve is the one that is currently controlling prices in the market. And if you're following them, you're gonna be okay. I think, I really like to be optimistic about it. If you're following the Federal Reserve and what they're doing with the money, and you're planning for the long term, starting now, you're going to be okay. And I think it's all going to be good going forward.
Well, and that's where it comes back to the beginning of the call with the topics above. They want you as retail, not even as an investor, but as retail consumers in the world, to put your money where they want it. That's why they spend billions of dollars in advertising, to program you to buy what they want you to buy. What's happening right now is what I would consider is the red pill in the matrix for the consumer market base, waking up, realizing that you don't want to actually go out and buy cheap shit from Walmart if you don't have to, because it's destroyed in a week and you throw it away in the dumpster. What really happens with people's money is the impulsive, constant buying of junk from these corporations that claim to be green and friendly to the environment and all this, but all they're doing is creating trash that we're buying because it's a little cheaper than a solid oak table. Like a particle board table compared to a solid oak table. That particle board table, you're going to spend $150 on it, throw it away within the first 6 months, and have to go rebuy another one. Where if you just made the main purchase of the solid oak table in the beginning, or any hardwood table, it would last you for the span of your lifetime if you wanted. That's exactly what they're doing in this market, where they want you to buy these quick flip plays. They want you to scalp because they're making money off the backside of it. But if you buy and hold the stock, which is the oak table, you can do what you want with it for the entirety of that company's life. You can hold it, you can sell it, you can buy more, whatever you want to do. But in the end, if you don't sell at a loss, you don't lose. If you wait until the stock is up in price, then you gain. Of course, it's got to have good fundamentals. They are playing off the stupidity and the ignorance of the consumer and not knowing where to put their money and why. Very, very simply put. Like I said, the boycott Amazon, boycott Walmart. That's companies that Citadel holds long. It's beneficial for Citadel to wreck other companies like Blockbuster, Radio Shack, Kmart, Sears, all those companies, so they can consolidate the market share to Amazon, which makes them profitable, which Citadel holds long on their books. That's where the naked shorting game comes in. I am fully convinced that Citadel and a few other market makers were in the game to destroy AMC so Amazon could buy out the market share. Consolidate all entertainment into one company that is e-commerce based so you can make money off the backside of the stock. So
100%. No, I mean 100%. And, you know, and this is just an idea to put everybody's head in the call. You know, if you live in America, we are a consumer economy, right? Quote unquote consumer economy. You know, if you want to cut down on your consumption, spending dollars for goods and services, just really start to sit down and think, what do I need? What do I not? What do I not need? What can I cut down on? Can I plant a garden? Can I cut down on grocery costs by, making my own fruits and vegetables? Yes, it costs labor and time, but we can switch this economy back. We are obviously the 99%. Everybody who is in this, this ape movement, who is in these space calls every day, we are the 99%. We are the taxpayers, the workers. And if we want to turn America from a consumer economy back to a producing economy, we are the ones that have the power to do that. Mm-hmm. We have to stop falling into the marketing traps, all the bullshit, spend your money here, commercials, for example, sports betting. I don't know how many people in this room follow sports. I very roughly follow hockey and baseball, but holy crap, man. Sports betting commercials have been through the roof. Everything on my phone, TV is all sports bets. If we want to turn the economy around from a consumption economy to a producing economy, we have to wise up and realize that everything that's being pushed is being controlled from the top. And if you put your money there, you are feeding that system. You are engaging into liquidity, or you are throwing liquidity into that pool. So if you want real change, I mean, when America was at its strongest economy, we were a producing economy. So it's just a really good idea. I thought I'd plant in everybody's heads. Sorry for the rant.
No, you're completely correct, man. Jay Brett, can you hear us now? Brett.
Yeah, sorry, okay, I was sending a text. Yes, I am back. I rebooted my phone. Hopefully this won't be problematic. My friend and I went to RailsConf last week, and he's upstairs, and he texted me asking me an AWS question. So I was just texting him back, since he's working upstairs and I'm down here.
I feel bad for Life is a Gift. Sorry, he or she has been holding his hand up for half an hour.
You're right. They've had their hand off the man.
Yeah, how are you, everybody? I was listening to it.
What's up?
Yes. Pretty good conversation. Spencer, Jen, Jeff Brown, the one, everybody's listening. I wish everybody a good week. Just wanted to ask you something, and it's been in my head for the longest. Do you guys believe if Elon Musk, for example, or Tesla, for example, are we doing all the fuckery that Citadel we're doing? Do you think the SEC would it be already charging them or against them or something, right? Do you think the SEC had something to do with this Citadel and all these things that they do in the background? Because all the company that we don't really know was what happened, like the Chinese Arcon, or the one that just got cracked down not too long ago, like a month ago. nobody knew about them, and they got cracked down for something. But Citadel just doing it blank in front of everybody, and it's like they don't want to see what's happening. So do you guys think the SEC also is behind all this thing? Maybe.
That's a really tough question. I don't know. Like, I mean, I want to be positive here, though. Like, I mean, I know everyone hates Gary. I hate Gary too, but I want to be positive thinking and believing that the SEC is actually doing behind the scenes work. And a bit of proof of that could be, like you just mentioned, the Archegos bust and Huang, and also recently the Allianz Bank and the AIG scandal with, what was it, like a fees of $5 billion, right? Spread amongst the people, and everyone got their money back and whatnot. And they seem to be tightening up enforcement, but yeah, who knows?
Well, let me color that by saying that Bill Huang takedown, that was not the SEC, that was the DOJ. And most of the actions recently have been the DOJ, not the SEC. The SEC got somebody recently with a pretty big fine, though. Yeah,
My
the
thoughts
SEC,
are,
I think, mostly is just underfunded, and I think that's the biggest problem.
Underfunded, or they can't actually do anything by law. Like, they don't have the authority, so to speak.
Yeah,
but
too, I mean,
sorry, but my question is, I don't know if you guys follow Elon, but he put something, and by the way, the SEC just attacking, harassing him. Oh, what you doing that we're gonna track down you your company and stuff like that. You understand? It's not the same treatment to Citadel. They basically is up there, and I don't know whoever don't see it because it's blind.
my thing with the SEC is they're an arm of the government, right? So, you know, I think a lot of us watched the Jon Stewart episode where, you know, he talked about the markets and he interviewed Gary Gensler himself. I think if you watch that interview, it was very clear to see that the SEC is nothing but an arm of the government, and you really can't blame them without blaming who is funding them, and that is Congress. So if you are blaming Gary Gensler, you know, if you're sitting here ragging on Gensler, you know, every single day, you don't understand that if he can't be paid to do his job, why is he going to do his job efficiently? Why he's being told to prosecute. I mean, he said it in the interview. Congress tells them what rules to enforce and who to enforce. So we can't sit here and attack the SEC every day without also going after the government who's funding them.
yeah, and the government is well funded by companies like Citadel, you know, companies like Virtue, through donations to their campaigns, you know. So they're incentivized naturally not to go after the big market makers, not to go after the prime brokers, and all the people working in the SEC, all the people that are, you know, it's essentially a revolving door into these private companies as well. So, you know, again, they're not incentivized to go after, you know, Citadel or Virtue or points, you know, like all these big hedge funds and all these market makers and the prime brokers like Goldman Sachs and, you know, JP Morgan. They're not incentivized to go after them because they want a job. They want a job that's going to pay them 2 to 3 times what the government's paying them. And, you know, this is one of the prime reasons why when I, you know, got into software development, I said I would never go work in the government because they can't pay you half of what you could make in the private sector.
It's no different than military industrial complex generals awarding contracts to Raytheon and Boeing, because as soon as they get out, they are immediately hired by those companies. That's why I quit working for the DoD, because the Army has now become a revolving door for the military industrial complex, which compromises the purpose of the U.S. military to do what it actually needs to do. Because now you have Boeing, Raytheon, Northrop, all these companies lobbying in Congress, pushing for certain situations to happen that's going to benefit the the market of the military industrial complex. We're sending people to wars that we don't even constitutionally have the right to be in anymore. It's the same process, but it's just like the Citadel hired the top Secret Service agent, the most senior Secret Service agent last year, that's working directly for Citadel now. It's all gone so far out of control with revolving door issues that the corporations now run the U.S. Congress. And that's why I keep telling people the best thing you can do this year is vote in the little guy. Do not vote for any of the major candidates that have been in politics for over 20 years. Vote in the new little guys so they can go in and make a difference. I mean, vote how you want, but that's just, my theory there is if we vote in the non-institutionalized people, they can go in and start changing things.
And it doesn't take us wiping all of them out either from Congress in order to make the change, because if they start to see, one or two people who are going to, buck the trend, then it's going to scare them. I mean, it's not going to scare them straight, right? Because we know scare straight isn't an effective means of, deterrence.
I took DARE in 6th grade. I don't know what you're talking about. They taught me DARE in 6th grade.
Exactly.
I still smoke weed to this day. No,
damn right.
Yeah, it's
I haven't smoked today, but I did yesterday.
I've been sleeping good this week. If you guys notice, I haven't been on space calls very much. It's because I've been dropping edibles each evening to catch up on my sleep cycle. So,
Spence, you're awesome, man. You deserve it, buddy.
Expensive.
Edibles. That's the way to go.
Oh man, it's crazy in New Mexico. They have the really good dispensaries. It's called Health and Wellness, and I go over there, and the first thing they did was they're like, "Oh, you got a USAA card?" I'm like, "Yeah." And they're like, "Well, you're a veteran?" They're like, "Yeah." They're like, "You get 10% off everything." I'm like, "Fucking right on, man."
Nice.
So I got.
Hey, Jay Brett, if they're too expensive, man, you look up a butter magic machine. You make them yourself.
My sister made her own weed butter by hand, like in the kitchen. She would like melt down butter and she would infuse the weed into it, like the flour directly.
Exactly what it is, man.
Does it taste like butter or does it?
No, it tastes a bit. You taste the weed for sure.
You do.
Yeah, you taste the weed.
No, you can taste it. I use coconut oil instead of butter because I know THC saturates fat, but I use coconut oil because it tastes better in coconut oil for me. But sorry, we're getting a little off topic here.
Yeah, but no, I'm just popping in because I'm Canadian. It's all legal here. I can't wait for you guys to get it, federally legalized. Fuck, it's so much better.
Yeah, it's. Federal legalization will come regardless, I think. But, yeah. I mean, there's nobody, almost every state now, close to every state has some type of a recreational or some type of use.
Yeah, it's slowly, trickling around. But, fuck, man, I just got a quarter pound for $150 Canadian.
Well, I've decided, I'm like, man, okay, we've done basically all the DD up until now. The market looks really good to be in our favor. We're winning. We are definitely winning. I was just like, man, I'm going to start kicking back a little bit and pacing myself because I know people after January 28th through the June run up just absolutely got sick and tired of this, panic sold, got out, didn't have the resilience to make it through the whole play. So I know we've all been pumped up for the past couple months, and I was like, man, I'm going to kick back, get back on my sleep cycle, get back in the gym, and get ready for the last stretch of this race. You know what I mean? And
you deserve that.
And to do that requires 4 milligram edibles that I can take in different dose gummies. So it's been a pretty good couple weeks for me.
Nice. Yeah, I just do dabs because it's way cheaper.
Yeah, I bought, I don't know, there's probably 25 4 milligram gummies in a bag, and it was like $15. So that's, for me, that's pretty good.
You can find nowadays that freebies, man. I got like fucking 200 milligram gummies for free just for ordering weed like several times.
That's cool.
200
we gotta
milligrams?
Yeah.
Yeah, I need like a fucking baby nip corner of that probably. Like,
yeah, see, the thing is, like a 25 milligram gummy for me, like, doesn't really do a whole lot.
Well, I haven't done anything in over a year. So
so your tolerance is down.
Yeah, I took 4 milligrams last weekend and was sitting outside with my neighbors, and I was like, "Hey, I gotta go. I gotta go to bed, man. Like this isn't working for me anymore." They're like, "What's wrong with you?" And I'm like, "I'm high." I'm like, you guys are talking about nothing important to me, so I'm just gonna go lay down.
Just gonna go to sleep.
Yeah,
it's the best.
Hey, talking about that, my wife bought this chocolate bar as a surprise for me. 1,000 milligrams.
Holy shit.
It's 10 little blocks of chocolate, but she took the wrap, so I didn't know it was weed or cannabis chocolate. The whole bar.
How much did you eat?
In the middle of the day, I was craving for something sweet, so I thought, let me eat this chocolate. I had to pick up my kids, bring the dog to the groomer, or pick up the dog from the groomer, and also bring my kids to soccer practice around 3 p.m. I was walking to pick up my kids because it's like 2 blocks away, and the whole entire world went weird. I started feeling tired. The sun was too bright. It was too hot. My head was going. I hear people from miles away talking. I was like, oh my God, I'm tripping. So I called my wife. I was like, listen, I'm not feeling good. I think the energy drink that I took really feel me wrong. I never thought it was a chocolate. And she's like, but you always drink that. And then I said, well, and I eat a chocolate bar. And she said, wait, the one that was in there, I was like, yeah. It's like, God damn it, you eat the whole thing? That thing had 1,000 milligrams. I was out for 2 days. I had to call out for... That was the most amazing high. But I was so scary. I thought I having a heart attack or I don't know what the fuck.
No, you just gotta let it wait and do its thing and maybe go to sleep. And
yeah, it took me 2 days to feel better.
That's why I'm all about proper labeling of any type of substance.
I know. Telling me about. It was a good high. I dreamed with a lot of rainbows and a lot of weird shit.
You know, it's funny. The one time I took too much, it was brownies. And of course, somebody set them on the table at the bar and I'd already had a few beers. And they didn't say they were weed brownies, right? So I'm like, oh, cool. I'm hungry. I'm going to eat a couple. Man, I got home. It didn't hit me till I got home. But holy shit. When you take enough THC, that's when you start seeing the, like, Indian Shiba hand lady with all the red rainbow colors and shit. It tripped me the fuck out.
Yes.
This is like one of my favorite songs. I love that song.
That's the old school shit I miss.
Hell yeah, man.
But then I got high.
Jen, I love my favorite verse, the third one.
Yeah.
Sorry, this whole time I'm thinking of this song.
Yeah, so good. Fuck.
I always love that song, Jen.
I was gonna go to class before I got high.
Never heard this song before.
I could have cheated and I could have passed.
You haven't?
I got high.
You gotta be kidding, right?
I'm taking the next step.
You're not serious.
And I know why. Because I got high. Because I got high. Because I got high. Go to the next. Go to the next. I was gonna go to work.
All right, I think you guys.
I really hope Citadel is listening to this call right now. I really hope.
Well, that's just it, isn't it? Us holding, we can either be actively engaged in nonstop holding, or we can be inactively engaged in nonstop holding. And that's something that I think the community cycles through. You see some people more active than others, then it'll cycle back and the message will keep going. Like this week, I was like, man, I'm just going to kick back. I'm going to get back on my proper sleep cycle. And I chose to do that with edibles instead of the VA sleeping pills that they give me. So I've had 2 to 3 good nights of solid rest. Detoxed from the hyperactive Twitter exposure that we're all exposed to, and we're sitting here in a really good position, you guys. We have all our money in the markets, and we're generating more on the side almost daily. We're the only money in the market that's not over leveraged 5 to 10 times. And literally, it's costing us nothing to hold. It's literally costing us nothing to hold. Maybe a slight opportunity cost in you being able to make other plays, but you could also lose your money doing that. So, pretty amazing times.
For sure. I mean, bringing it back on topic here, going to ISDA Banks and the title and such. I personally have no idea what this whole ISDA Bank thing is. I recently, I haven't even seen this until probably 2 days ago. I think Bigums was tweeting something about ISDA Banks, and I saw it. But yep. I recently closed out my car loan with JP Morgan, and yep. I'm starting to use Fidelity as like a normal checking account to send money in and out. And I just want to know, can somebody like touch up just real quick about what this whole ISDA Bank thing is going on?
So, in a very, very layman's terms, very, very short description, any bank that is an ISDA bank more than likely is using your money that you put in your account to put on their books to meet margin requirements, right? All their accounts with all their cash in the bank, they're basically over leveraging your money to make bad bets. Like Bank of America is an ISDA bank. Here's the problem with Bank of America. They're short AMC and are loaning out AMC shares. They are definitely short AMC though. I looked and checked today. So if you put your money in Bank of America, they're taking the money in your account and they're using it to put on their books to meet their margin requirements on a position that you're invested in that they're short on. They're using your money to push your stock price down. And if you're a teacher or you have a 401k or any of these retirement funds that are taking a huge, massive hit right now, it's because of the irresponsibility of these big banks that facilitate ISDA. You know what I'm saying? So you're not only putting your money in the bank that they're using to make bad bets, but they're also using it to meet their margin requirements on investments that's killing your 401k.
You know,
I want to just add to that, sorry. The other thing that is the banks, as per AMC Bigums, is that they can actually create these contracts, these swap contracts between the market makers and other banks, which do not require any deposit of collateral. Yep. So this is another thing that the banks are allowed to do, which is causing mayhem on the market, because that's why there's crazy over leverage, because they can use the one source of liquidity or collateral to make multiple contracts. Yep. Meaning, so basically they can short a company through one bank, and then they make another contract with the exact same collateral and not need to put that up. But as I understand it, coming June or July or whatever, there's a thing called Phase 6, meaning a rule change where they will actually have to deposit real equity as collateral to be able to create these contracts. And this is an effect basically from like what we can see is happening with the crunch, but also that these other ISDA banks, not all are bad banks. Like there's ISDA banks all around the world. There's like 700 of them or something like that, or 800. They've kind of come together realizing like this is not okay. And now they're trying to put or enforce regulation on themselves, so to speak.
This just goes to show me, this is why I love this community. I mean, I've had this theory that JP Morgan and all the primes and the big banks have been, you put your money in your checking account and they're using it either as collateral, they're using your money to invest, right? And I've had that, in my head for probably the past 3 years. And it's just crazy to hear that there's actually a legal rule allowing them to do this kind of thing. And I really appreciate
done this since the 80s. Since the deregulation of the market for the banking, that's exactly what they've been doing all the time, because before the 70s, they were working as a bank, meaning use them as a checking account, and they gave you a small interest on your money. But since the deregulation in the 80s, they were literally allowed to invest. And with the investment comes over leveraging, right? And back to the Bank of America, if I'm not mistaken, the latest numbers was that they're over leveraged 181 times. You can't make this shit up. It's like 180 times the collateral that they have on hand.
Well,
I saw it last. Sorry, Spencer.
No, go ahead.
No, I saw it. I mean, you're totally right, man. I saw it last. I think September. The balance sheet for JP Morgan got released. And I saw, JP Morgan's over leveraged 140 to 1, mathematically wise, on their in the derivatives market. And it's like, it makes so much sense now what's been happening over the past 4 decades, however long it's been happening. You put your money in a checking account, that money is either used as collateral or direct liquidity as an investment for the bank. And that's not okay. They're supposed to be holding your money for you. They're not supposed to be investing it. I didn't sign up for a 401k. I didn't sign up for, an individual investment professional to handle my money, to invest that. I would have done that personally, right? So it's just crazy. I appreciate all you guys because, it's crazy the information that comes out every single day that, average people, they may not know. And, I think that's the thing I love most about this community is that we're all about spreading info. Thanks for that, Sam. I honestly had no idea.
No problem. I'm not even going to joke. Do you hear me, guys? Sorry.
Yeah, we hear you.
I'm not even going to joke here that, the amount of information I've learned during the 1.5 past years through this community is more than I ever got through business school. I'm not even kidding. The amount of information and deep detail from the community, it's been amazing, especially people like Spence putting on these host space calls and the availability on YouTube videos and Twitter and everyone reposting. It's amazing. If anything, this movement is so much more than stocks at this point. It's all about educating so people can take their own decisions and stop being so goddamn gullible when they see big names and companies. And all this ties back to the whole deregulation with the whole idea that the banks are now allowed to do fractional lending, which is the same thing. It's just a fancier word to when people say create liquidity. It's basically fractional lending, but that's what the market makers do now. They're creating liquidity, basically creating money out of nothing to make people still going on. So it's getting pretty late at this side of the world. It's almost 1 a.m. over here. I just want to say a huge thanks to Spence holding the space and everyone inside. It's great to have these discussions. I'm always looking for more knowledge to gather. And with that said, thank you everyone and have a good day.
Yeah, thank you, Sam. You said it's 1 a.m. Where are you from?
I'm living currently in Indonesia.
Oh, wow. Oh. Well, thanks so much for taking time and talking to all of us.
No, thank you guys. Honestly, it's my pleasure being here and just listening and sucking everything in like this. It's the knowledge in this community is amazing. I've never had this kind of broad discussions in any kind of community ever. Everyone is willing to listen, discuss in a friendly manner. And I know everyone comes from all walk of life and every country around the world is holding AMC. And I think this is one of the biggest drawings towards the stocks because you can come here and get educated and have a voice and be part of something bigger, hopefully.
Hell yeah, Zach. Indonesia, man, the best waves to surf in the world.
Yeah, I'm actually from Sweden, but I'm living currently in Indonesia, so to speak.
Hey, man, if you don't surf, take some surfing lessons, man. They got a great breaks out there.
I know, man. Bali is close. I love it. All right, guys, have a good day.
You too, Zam. Thanks for coming, man.
Have a good day.
Yeah, the key on that last conversation is the amount that everybody is over leveraged right now in the market, except for retail, is insane. We've been talking about how over leveraged these funds were back before the market started tanking and before they lost 40-50%. And like Mark said, Tiger Global's next. Their whole chain, their whole Ponzi scheme is going to be next. That's going to put a big dent in the market, and then it's all going to fall to the market makers. These market makers have dug such a deep hole that there's no way for them to get out of it. And the only thing they're doing now is trying to control the crash. That's all they're doing. They're trying to save whatever could be left after they lose, because you're going to see Citadel try to recirculate back in and start it all over again. The government too, the SEC, Congress, they all know it's happening. They're all trying to control the descend. Retail's not leaving. Ken Griffin said it himself. Gasparino said it himself. George Noble about lost his shit on a space call last month or 2 weeks ago, talking about how retail is not selling. If we don't sell, they are screwed. There's no way for them to flip their position if we don't sell, because they have to pay back trillions of dollars in shares shorted, not purchased. Citadel again has like 65 billion in shares sold, not purchased. It's crazy.
100%. It goes back to the original thesis, man. I mean, if anybody in this call is a new ape, the original thesis was buy and hold was gonna destroy them, because they can't afford to pay the interest rate on the borrowing anymore. I mean, it's been a year. How long have they been borrowing these shares? I mean, the cost to borrow on all the stocks we love are, I mean, they're nominally higher than all the average cost to borrow for a regular stock in the market that's not manipulated, right? But it's, that was the original thesis, right? Buy and hold was going to drain them of their liquidity. And we're seeing it in real time a year later.
Yep. And even with low cost to borrow, the amount of shares that are out there are insane. So, you're not making it necessarily in the percentage, but the volume. But here's the thing. When it doesn't become viable for people to loan shares anymore, say via a GME GameStop dividend split, they're not going to miss out on what's going on there. They're going to have to recall shares so they can process these dividends correctly. And I think what's going to happen is you're going to see some GME shareholders come in and say, where the fuck's my dividend? Because they're going to be holding shares that aren't legitimate. I mean, they are legitimate. What you bought is legitimate. But when you don't get delivered your dividend, or they have to deliver more dividend than the legally issued shares, there's going to be a big problem. And Ryan Cohen's going to have a lot of firepower to go after the market. So really big deal.
This is actually kind of one of the theories I'm testing out with BBIG, and obviously not financial advice. I wouldn't recommend anybody, go buy or sell BBIG. But my thing that I'm currently, working on with a thesis with them is I'm going to see what happens with this Cryptide dividend that they're issuing. And BBIG is known to be, also a massively overshorted stock. And I want to see what happens, right? I personally have a bunch of shares, and I just want to see what happens when this dividend separation of Cryptide happens, because I think it's gonna preliminarily show what's gonna happen, on an exponential scale when GME does do the dividend split. BBIG very, much smaller interface than GameStop, but I'm really hoping to see a positive trend from BBIG to preliminarily show what's going to happen when GME stock split and they receive the dividend of the shares.
Well, and that's the basket theory, that one is going to affect the other, because any of these meme stocks, when it starts squeezing, they're going to have to either sell out of their other positions to cover one or the other, but it's just going to collapse. Subhas the Boss on YouTube, sorry, I can't say his name right. He said, well, buy and hodl crippled Melvin Capital, did it not? And of course it did. Dude, Archegos blew up, White Square Capital blew up, Melvin blew up. It's just a matter of time, you guys. It's all going to lead back to Citadel and Susquehanna. BlackRock is playing their position the way they want. They've got enough money to do whatever they want. But in that, they're not going to lose out to these market makers, man. So it's just a matter of time. It's all leading back to the source.
Yeah, and I just also wanted to say, like, all these companies like AMC, their lawyers have, things drafted and prepared for, like, because if GME, they can show that there's oversold shares through their dividend or whatever, you can bet all these companies have their lawyers ready to say, hey, we believe the same thing's happening. Now there's legal precedent. Try and get a judge, order looking into it. That's what I kind of think when Adam Aaron says, when we're ready to pounce.
Yep.
Legally, they're ready for any precedent that they can jump on and be like, hey, we think the same thing's happening.
He knows it's happening too. The way he stated his comments in the earnings call with, if you don't have your proxy yet, make sure you call your brokers, because I still have not got my freaking proxy from Fidelity. And they keep giving me different excuses, and now their new excuses, I'm going to go talk to the back room real quick. Well, what the fuck is the back room? Where did this come from all of a sudden?
You still haven't received your proxy yet?
Nope. And I've called them, had them on, I've recorded the calls. She said first, well, it takes 40 to 60 days. Then second, she said, I got to go check with the back room because AMC might not have delivered it yet. But I think what the real problem is they don't know who the fuck to send it to. They can't keep track of all the shares that are out there. It's absolutely ridiculous. The only proxy I've got's from DRS. What's up, Swing?
I was going to say, have you reached out to, was it DF King, the company that AMC has hired to manage the proxy vote?
I'm going to do that tomorrow. I kind of planned on it. I was giving Citadel another week, but it's too close to the time frame now. So, the fact that Adam Aaron came out and specifically said that, pretty sure that means he knows there's a lot of shares out there that are not being tracked properly. So, yeah, Adam Aaron's comments, retail owns well over 90% of the float. Just things he said in the earnings call that fit the thesis that we've had for years. And man, we were so conservative back in the day, 4 months ago when we were saying 500 shares average per shareholder. At this point in time, with the price around the $10 range, I think it's probably way past that. Go ahead, Justin.
I was going to say, I hope nobody has forgotten that JP Morgan, even after the June run-up, was trial testing a product to protect firms from getting blown up from this stuff. So I can tell you, JP Morgan is not going to throw out this product months after the June run-up for all this stuff that is, quote, dead. We all know, and if you don't, you should research their basically meme stock protection tool to protect funds from getting blown up. So if you think it's over, it's far from it.
Well, and that's where I love the catalysts that are coming up with GME and the executive order. Not to mention that, but I think the investor base is growing because I'm now seeing people on Facebook that never talk about the economy or the markets. Suddenly, they're talking about the markets, their 401ks. They're going, what the hell is happening? And then they come back to my endless Facebook posts ranting about Citadel and the market collapse. And they're starting to come on Twitter. They're starting to jump on YouTube. There's people waking up to what's finally going on. And it's beautiful that they're doing it now when we're under $15 a share on AMC. So it's the pressure is just building on top of these over leveraged funds more and more every day. And the stupid thing is they could have got out at $5.
I just want to know. I mean, I think J-Brad, you're still in here. Yeah. I asked Mark, what his thoughts on the theory was like, if BlackRock was the largest institutional shareholder in both AMC and GME in the beginning, if they were the White House economic advisors under Biden when he got elected, how was it more profitable for them to lend out their shares this whole year than for them to say, let the White House in on it, saying, listen, this is what's happening. We own, BlackRock owns GameStop, AMC. If we crush out these hedge funds now, these short hedge funds now, even without raising the capital gains tax, I did the math. It would have been, we could have paid our national debt over a full time if 4 million people were truly invested and sold with capital gains, So I just want to hear either Jay Brett's.
That's just AMC.
Yeah, no, that's just AMC. I know exactly. So I just want to hear, like, what do you guys think about that? What is the motive behind it? Were they really more profitable to lend out their shares all year, or what do you think was really behind that? Why hasn't this been crushed out since now? Most of us who have been in these plays since January or before that, our shares are long now. A majority of them. I mean, I'm still buying week to week, of course, because I can't stop, obviously, but most of our shares are long now. So like if they really wanted to fix the economy, if this party really wanted to do the right thing, what was the motive behind BlackRock not letting them in on this?
Well, so we kind of touched on it a little bit. The thing is that it's not just about the amount of money that BlackRock would make on something like this. It's about the fact that, if something like this went through, they know the consequences are that, that would probably be the first downtick in their ultimate demise in control over a large number of assets and markets. And, at the end of the day, it's not advantageous to BlackRock to let something like that happen. The same holds true for Vanguard. The same holds true for, Apollo Global, and I don't remember who the third largest asset manager was. It is Apollo Global, BlackRock, and then I can't remember the third one. I never can. But the three of them control an entire year's worth of GDP under their wing, and as great as it was that Sanders and AOC and Warren all came out and, guns a-blazing in that one that one press conference that they did talking about the bill that they were going to introduce. A lot of it is grandstanding and posturing because they know that at the end of the day, it's more about getting their name out there and exposing them than actually being able to pass that legislation, because that makes them look good to the voters. But at the same time, BlackRock is the largest asset manager globally, and it's not in their interest to give up that kind of control, no matter how much money it would make for the government, because it's not about money being made for the government. It's about how BlackRock can further line their pockets. And at the end of the day, BlackRock can't line their pockets harder and further if, something happens that disrupts the status quo for them.
Disrupts the flow. Yeah. No, I get it. Yep. No, it makes so much sense. I mean, you think big, right? And then you hear somebody else's take on it. You hear somebody else's analysis, and then you're like, okay, yeah, you can absolutely think bigger. There's always something else behind the scenes. No, thanks for that answer. Yeah.
And it doesn't have to be complicated either, right? Like the simple version of all of it is that, if BlackRock were to be on board with something like that, they stand to lose a lot more than they stand to gain by doing something like that. And so it's just not in their interests.
Yeah, and more or less, not even about BlackRock making money, but if my point was more towards the capital gains aspect, right? if millions of retail investors, or, you know, a lot of people say the 99%, you know, the hard workers, the blue collar, if they were heavily invested in AMC, GameStop, and these things were truly allowed to run like they were supposed to due to the supply and demand ratios, I mean, you know, the government itself, not even BlackRock, you know, the IRS would have collected probably a record dollar figure of taxes in a single given year had this played out in January or June when, you know, these things were running. And I just think it is very weird. You know, there's obviously BlackRock has their own motive, but speaking on a larger term, as far as the government goes, I mean, I just don't understand what the motive is to continually suppress the working class, or, you know, the hard-earned moneymakers, the hard-earned investors, the people that, you know, put their money where their mouth is and they buy the companies they like. I don't understand if all the preaching that's done, you know, to help the common folk, it could have easily turned around the economy if this thing had played out as it was supposed to in January, due to the capital gains tax alone.
But you're assuming that the government actually wants the economy to turn around. You're assuming that people want that's the regular, you know, Joe Sixpack to actually succeed because they want people to be wage slaves effectively. But that's, you know, but again, it comes down to even more simplistic. It just comes down to the fact optimism. Yeah, I mean, like, you just have to remember who pays those politicians' bills, and it's those big companies, right? So it's in their best interest to listen to the BlackRocks and Apollo Globals of the world and to keep the status quo, because they're going to continually keep funding them with more, you know, with more donations, which is going to keep them in office, which is going to keep them around longer and keep them relevant longer. And that's what they care about. They care about keeping their seat, and they care about being paid to be in office. And that's again why, you know, Spence talks about getting somebody new in office, because they have not yet been taken over by that machine, essentially. So yeah, it's all very simply just who, you know, don't bite the hand that feeds you. And that happens to be the hand that's feeding them is BlackRock, Apollo, and you know, the other big ones like Citadel.
Yeah, appreciate the perspective, J-Bet. Thanks, man.
Just bought more GameStop and Highcroft. I got lucky. I found money in my account that I didn't know was rolling over. So yeah,
nice.
That was fun.
The other thing I was going to say is that it's a bad assumption to assume the U.S. government wants to pay off the national debt, because the entire world runs off of U.S. treasuries as collateral for all of their debt. So actually having a national debt is actually helpful in this debt-based society that we are in, and actually increases demand for U.S. dollars, because you trade those U.S. dollars in for U.S. treasuries. It's what buoys up our trade surplus, or our lack of trade surplus, our trade deficit. All of that works out because we have this huge national debt with all these U.S. treasuries that are getting issued in order to, you know, pay for that debt. And that is what allows for our dollar and our entire world's economy to work the way it is. So it actually works against us, believe it or not, to pay off our national debt.
I totally believe it, man. It's just like, you know, Swing, I've been listening to you for a while as well. I've been following you for a while as well. It just goes to show, I mean, you can never stop learning when you come into these space calls. Damn, I mean, I know we get off topic. I know we talk about stupid shit every now and again, but no, I mean, I didn't realize that. Yeah, I mean, it makes sense now. I mean, I have about 7 years economic knowledge and really trying to learn deep about what the government's motives are. But I appreciate that perspective. Yeah, no, it makes total sense.
Yeah, man. Well, I mean, man, we covered the headline topics perfectly today. J-Brat, Swing, Jen, Mark, Lucas, everybody that came in, and Justin, Yair, Malcolm, Duncan, everybody that came in to help cover these topics. Thanks today. This is probably one of the most productive space calls I've had in a while. Like, to stay on topic, get to the there. Mark came in, talked about Tiger, which was beautiful. We covered MBS, ISDA Banks. I think everybody has a better understanding of how they hurt your play now. So, if anybody, I'm going to get ready to go take the dog out on a walk, maybe eat some lunch and stuff like that. But if anybody wants to contribute to any closing comments, please go ahead.
But one thing I wanted to share was that cost to borrow is between 4 and 25% on GameStop, and I'll take a look at AMC's here shortly.
Slowly going.
Yeah. Just remember though that Mark said in a number of space calls before with the cost to borrow stuff that like even at a 25% or 40% cost to borrow, I think it was Mark was saying that like it's worthwhile and he would take that every day if he knew that he could get 50% or 70% out of the stock.
Yep.
So just keep that in mind, everybody, that like even though the cost of borrow is going up, like, and it does hurt, like there's plenty of those funds that will take that bet, all day long. But there's such pressure in the system right now that I don't think they can really handle that too much for too much longer.
It's adding to their liquidity drain.
You're referring to they'll take the 25% margin cut if it means they make a 50% gain on their nominal stock play. So like they're betting that AMC or GME will downfall another 50 to 70% from where the price is now. Is that what you're saying?
Well, in normal circumstances, yes. I think I think where we are right now, probably not. But
I appreciate that. I think they're screwed. If they're betting that we're going to go down another 50, 75%, I mean, I'm jacked.
They have to.
Thanks, Spence. Thanks, Jen.
Yeah,
I
Lucas,
appreciate
thanks for coming
guys.
up, man.
Yeah,
I appreciate you guys. I got to hop out too, so I just wanted to say goodbye as well. I appreciate you guys. Jay Brett, thanks for talking swing. Everybody in here, you guys are the reason why this keeps moving forward. Thanks, man.
Yeah.
Jen, fire it up. Fire it up. Let's go.
You guys want to hear that song again?
Go ahead, here.
Oh yeah, go ahead, yeah.
Okay, I was gonna make it quick. Unusual Wells posted that there was a reverse repo of $2 trillion for the first time, and then GameStop finally has in beta their GameStop wallet for Ethereum and Loopring, so that's exciting.
Yeah, I just set mine up, and I was gonna talk about that Unusual Whales post, and I forgot. So thanks for bringing it up.
Can Anya make some closing remarks?
Of course.
Of course. Okay. Anya, don't be shy now.
Yes.
No, what AMC the moon?
Yeah.
Let's go, baby.
Yeah.
She's like, we're about ready to put her on for naps.
Anya, who's going to the moon?
No.
Mama, Dada, Anya.
No.
No? What?
I see the movie.
Yeah, girl.
Let's go, baby. She's tired right now. She's about to take a nap. So normally she's more
good. I'm ready to take another nap too, but I know I need to go exercise. So
let's go, baby. AMC the moon.
Yep. I want to thank everybody again for coming, and like Swing always says, he's got me trained now. Make sure you go to the movies this week. I saw Doctor Strange for the third time on Saturday with my kid. It was her first time. She's a huge Wanda fan. But there's other great movies out there, man. Even if you just swing by, if there's one close, just to grab lunch or grab a popcorn, that's a thing too. Don't forget about AMC On Demand. Make sure you check out the GameStop NFT marketplace. Get that set up. I'm pretty sure you're going to hear something about AMC using that marketplace soon. So we have all the catalysts and we have all the cash. Cash is king. Don't forget that. We're not over leveraged. They are. So keep your head on a swivel, stay calm, cool, collected, and watch for any opportunities in the market, man. That's all I got to say.
Let's go, baby. AMC the moon.
They have to buy back our shares.
True.
We don't have to do anything.
And I don't feel like selling mine. So there you go.
I was gonna eat your pussy tonight. Sorry, there's a bad word there. Now I'm jacking off. Okay, that's enough. Because I got high.
What version did you play?
That's the explicit version for sure.
I'm sorry.
I was getting
That is not the
my
on
share,
version.
and then I got high.
It's a
All
great
right,
thought.
guys.
Whatever.
Great call. I'll try to set up another one. I'm not going to do them every day like we've been in the past. I'm just going to try to hop in when there's an open spot and have more detailed conversation and topics. And again, thank you everybody for coming in, and I hope you have a phenomenal day.
Sounds good, Spence. Peace out, everyone.
Peace.
Peace.
All right, everybody. Thanks for coming. That was a really good call. Sorry about the beginning of the call with the feedback. My kid was streaming Minecraft this weekend. So appreciate you all coming. Please, if you could hit the like and subscribe, share the call, really highlight. I'm gonna trim the video up to start talking where the feedback quit, but try to share it to everybody so they understand what's going on with the ISDA Banks, what's going on with the boycott of products and companies that Citadel holds long. And no options may, man. Spread the word. Thanks for coming, everybody. Froggy